All right, good morning, ladies and gentlemen. Greetings and salutations. How's everyone doing today? It's Friday. We made it. End of the week. Does anyone else get bummed that it's Friday and you don't get to trade tomorrow? I do sometimes. And by Sunday, I'm chomping at the bit. Hong's like, nope, I love my weekends. I love it. Morning, Josh. Morning, Erla, Rob, Hamid, Steve. Hong, Rob, Indu, good to see you in here. Pete, GWC, it's great to have you guys. Jeffrey Dean, tattoos ablazing, ready to go. Good morning, Joel. Good morning, Jen. Good day. Good odd afternoon, Jen. Your accent is almost impossible to understand. Kidding. Guys, I woke up wound up. I'm so excited about the education today. I don't know why, just some days you do, right? You sleep well, you wake up, you're ready to go. Hong, I will be doing market replay again at the end of classroom. I noticed yesterday when I went through it, I don't think you were in here. I think you might have jumped ship just a little early. So stick around. It's one of the things that I have to do at the end of class because it requires me shutting down all of my workspaces and disconnecting so I can start fresh. If you have to leave early, let me know. We'll figure it out. We always figure it out. It's what we do. Trading is about adapting, I suppose. I'm not sure. Maybe life is. Not to get all deep. Good morning, Zorro. Good to see you. Guys, this is forexfactory.com. This is where I go to check news. This is where I look for those orange and red boxes next to the time. These are Eastern times. And guys, I'm looking for the high impact. I'm looking for medium impact. And I do this because there can be an emotional response that comes from news releases. When FOMC Harker speaks, medium impact, somebody with $1 bajillion in their account might say, oh my gosh, I don't like what he said. Let me sell off my position. And the market goes down quickly, even though everything said that it was supposed to go up. So I don't trade the news. I don't worry about what they say. Couldn't care less what they say. But what I do know is that I don't want to step in front of that freight train. So anytime I see high impact, anytime I see medium impact, there is about a 3 to 4 minute window that I give myself. I refuse to be in a position before it. And then I'll watch the market and make sure that it slows down to the point where I can read it. And then I'll begin trading again. So it's not typically a long time unless it's one of these FOMCs. But it keeps you out of the way. Ed Schaefer, good to see you in here. I recognize that Camaro front end. Guys, everything that I talk about every day comes from the education page. And I want to share with you the software guide. So those of you that are still pretty new with me right now, make this your mission over the weekend. Open up your NinjaTrader and try to break it. Knock your charts out of whack. Set up ATM strategies. Practice getting in and out. No, Hong, believe it or not, 90% of my day I don't do anything. And if I have to do nothing for 10 minutes, I'm cool with that. When there's news, Hong, that's when I go toast a waffle or scramble some eggs, refill my coffee, play with my dog. Like, I don't have to be in front of the market all the time. There's a lot of life to be lived out there. It just lets me know when I shouldn't be trying to take a trade. Great question. So guys, the software user guide, go through and practice these things. Practice your screen captures and make sure that you can do it, that you can annotate charts. We're going to discuss market replay today. Make sure that you can do your stops and targets, ATM strategies. Deleting old charts, templates. This is a good one to practice. I do this at least once a week. Chart templates, applying them. So go through and read through this. And then if you have any questions, bring them to me on Monday. But learning how to use that platform a little bit is huge, guys. Because the more familiar you become with NinjaTrader and how to just do the basic mechanic stuff, the more you can focus on the trades that you're taking and the rules that you're looking for. From the trading guide, these are all the rules. This is what I talk about every day. And I'm very adamant about telling you guys that there are no secrets. I'm going to give you everything that you need to be successful with the software by the end of this classroom. You will know a set of rules. I'll hand you a plan, what they look like. And guys, let me say this, because this is one of the things that I've noticed lately. This classroom for the first hour is designed to teach you the highest probability, the best of the best, the easiest to recognize, the most rewards for the time you spend in the market trade. This is a focus on a high probability trade. And a high probability trade means that each indicator on every chart agrees for the trade. And the only way you're going to know that is if you learn to read your indicators. Triggers are going to be the strongest. No termination conditions exist. And there's going to be no trouble spots between your entry and your target, guys. This high probability trade is a trade that typically wins 70 to 80% of the time. This high probability trade creates an awful lot of confidence through that memory of success. But guys, this high probability trade, really the focus is to teach you to read your indicators, to become comfortable with recognizing advantages. And I can't stress this enough. This is not the only trade that you can take. This is the one that's going to open every door for you. So I kind of go real harping on rules in the beginning for a reason. This trade, this first trade, teaches you to read your indicators. It teaches you to recognize advantages. It lets you understand a couple very basic concepts that are going to carry you next level, guys. 90% of your day will be spent reading your indicators, not trading. Looking at your charts and speaking out loud, do I have what I need to take a trade? 10% of your day will be actual trading. So if we spend 6 hours together today, the likelihood of you taking trades is going to fall in like a 36-minute span. You have to learn to be okay doing nothing. Trust me on this one. But the cool thing is once you learn to read your indicators, once you can look at your charts, you're going to understand where the market is likely to continue. In the high probability trend trade, this is your entry. That point where the market is most likely to continue with the trend. You're going to understand where the market is likely to go eventually using key Fibonacci areas, momentum indicators. You're going to see these spots in the distance. You're going to say the odds are favorable for the market to go there. And you're going to understand where the market is likely to stop. And guys, this is one of the most important rules that you can learn, along with that first one of momentum. Because rule number 2 is designed to keep you out of trouble. Rule number 2 is designed to keep you from trading into areas that can stop the market, that can create untradeable bounces, areas that can really just spoil your good time. So when we talk about this high probability trend trade, it's only 3 rules. Each rule creates an advantage. And guys, a trade for the brand new user, for the day one, first week, I'm just trying to learn this stuff user, is momentum plus a clear path plus an entry area. This is the most remedial 101 basic foundation laying approach to trading. This high probability trend trade, guys, might set up perfectly 2 to 3 times a day, sometimes 4 to 5. But once you learn it, you're going to begin to see the other opportunities. And this is what I can't stress enough, guys. Don't get bummed that there's not 1,000 high probability trend trades a day. Wouldn't it be wonderful if it was that easy? But what you learn from these 3 rules is going to open every door you could ever hope to have open in trading, guys. So we're going to have strong triggers. And rule number 1, this will give us the advantage of momentum. We're going to have none of those termination condition areas, those likely to stop the market areas. This is going to assure you a clear path and room to your profit target. And then finally, we're going to use rule number 3 to define our entry point. And that's it. Only 3 rules. And guys, they're very black and white. Your brain is going to try to make them more complex than they need to be. Your brain is going to try to bend them to your will. Let them be as simple as they are taught, guys. Only 2 charts define these 3 rules. The large chart is a slow chart. It's a very broad stroke of a brush, guys. You are painting your living room wall using the large chart. It will define the direction of the market and tell you which way you should be trading. It will define the momentum in the market and let you know if you have that advantage from rule number 1. And it will define whether or not you've reached one of those areas that could stop the market, that could reverse the market. And that's rule number 2, assuring you the clear path. 66% of your advantages come from the large chart, guys. The large chart leads the way, and it's slow. But once those rules are met, you'll look to the right, to that small chart, to that fast chart. Now that you've painted the living room wall, we're going to get around the sockets and the light switches. This is your refinement chart. And inside of one bar on the large chart, you're going to see 20 to 30 bars on a small chart. We're going to use this chart to pinpoint exactly where the market is most likely to continue. This is going to allow you to reduce risk. This is going to allow you to increase your profit potential, guys. And rule number 3 is designed solely to get you into the market. This first hour in class is designed solely to pinpoint your entry, that point where the market is most likely to continue. Because once you can put these two together, you're going to see more opportunities. Nexgen offers this up on 2 charts because it shows you who you're trading with, or in a worst case scenario, who you're trading against. Your large chart is the large crowd, the men and women with so much money and influence that if they wake up, have a cup of coffee and say to themselves, you know what, I think the market should go up today, they're going to force it to go up. There's no reason to fight them. They're going to establish the trend. They're going to establish the momentum. They're going to react at those key areas. And then there's a small crowd, and this is our small chart. And these guys still have more influence and money than we ever will, guys. They are capable of moving the market, of pushing it down, of creating these little retracements. But these guys fail. They fail 70 to 80% of the time. We're going to pinpoint their failure spot using that small chart. And man, I can't skip this one. You guys know I'm a sucker. Look at that. Oh, so stinking cute. Guys, I cordially invite you to always present pictures of your puppies. Holy crap. 2-month-old. Oh my goodness. I do love dogs. Sorry, there's a little break in the action. So we're going to keep it simple, guys. We really are. I'm going to tell you to ignore things. I'm going to tell you to not overthink things. I'm going to encourage you to allow it to be as easy as it is presented and try not to add things that don't need to be there. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. That's the goal, is just to learn when those advantages are present, to be able to identify them in the moment. Who makes up SC because they lose 70 to... Oh, the small crowd? No, so Hong, and again, I'm dumbing it down. I really am. So when the large crowd says up, and that's the wrong one. When the large crowd says up, and the large crowd is going, and that's pushing, and everything is screaming, whoever creates this influx, this little push, they're not looking for home runs, Hong. They're probably trading 10,000 contracts and making $50 on each, knowing that it's not a home run. But they have the influence and the power to push it down a few points. And that's their whole trade because they have the power to do it. And you'll see it all day long. And all it is a fight between buyers and sellers. Sellers will test the water. People that do these little pushes are the same people that reverse the market at the key areas. And this is them testing the waters. This is seeing how hard the large crowd is willing to fight before they reach their key area. It's really pretty cool that we can capitalize on this. But believe me, they have a plan, and their plan is to get paid. But it's almost like poking a stick in the mud to make sure that it's not too deep. And if it appears to be a little deep, then you pull the stick out and you move forward. And that's kind of what they're doing. Does that make sense? Novak men are horrible at analogies. Just a heads up. My wife makes fun of me all the time. Cool. We're going to learn the rules, guys. That's our whole focus for an hour. Let's learn the rules. Let's know what it looks like, what it means to us, how to study it. Simulate, practice. Open up the NinjaTrader, guys. And if you think you see a trade, take it. And that's cool, right? We're just learning. But post your trade in the classroom. Show me what you did. But most importantly, tell me what you saw. If every time you look at a chart, take a picture, and you talk about momentum, and you talk about the path, and you talk about the entry, what you're doing is you're creating this correlation between the rules and the visual. But more importantly, you're telling me how you read the indicators. My job is to teach you to read indicators. So I won't know if you're reading them incorrectly if you don't tell me what you see. This is how you're going to get the best feedback in class, by including momentum, path, and entry. And if you're not sure, write it on there. I think I had momentum, but I'm not sure. And we'll go back to the lesson. I thought I had a clear path. Maybe I didn't. We'll go back to the lesson, guys. It's the questions that you guys post that make this class amazing. And you can't ask too many questions. And you can't ask the wrong question. It's real important that you know that. What do I mean added back on? Oh, see, now you're starting to look at stuff that's not important, but that's okay. If I took a short trade right here, I took half of my contracts off at this divergence low line. So if I traded a 2 lot, I might exit at the first sign of trouble. But everything still says the market's going down. So when it pulls back to areas inside of favorable large triggers, guess what? I just add that contract back on and I make money twice in the same range. So that's what the added back on means. It means that while I took profits here, probably made a couple $100, when the market retraced, instead of just sitting through that drawdown, I re-entered when my rules were met. And I made money again all the way down. And then I exited down here, right at the trouble. That's all that is. Does that make sense? Cool. And you will get to a point to where you do that. And it's kind of cool because I'll watch you guys take 7 trend trades all the way down. And you're double dipping in areas all the time. And that comes with a little bit of experience and a little bit of trust. And you'll work your way to that. But right now we're going to keep it real simple. So simple that it's right here. We're going to simplify. I'm going to give you 2 trades. But it's the first trade that's going to make it possible for you to take the second trade. So let's focus on the rules for the high probability trend trade first. You have to understand what looks you'll commit to. And you've got to learn them so that they become easy. So I'm going to address one of the comments in the room. I've been listening to this classroom for 2 years, and I still feel like I'm just learning. So guys, there's 2 things that you have to do to get to where you want to be. Listening to me is probably not going to make you a great chart reader. Listening to me is probably not going to make you a solid trader. The only thing that's going to do that is study, is practice, is repetition. I'm just going to help you and show you what you need to study, what you need to practice, and what you need to repeat. So the easiest way to get to where you want to be is not listening to me, guys. I mean, obviously listen to me a little bit, but post your trades in the class. Tell me what you're doing. Tell me what you see. Let me look at your charts and we'll identify any challenges that you're having and we'll work together to fix it. You guys are killing me with the cute animals this morning. I am not going to post on every one of them just yet because I'll never get through the classroom, but I love it. The second thing, guys, goes back to that making the looks easy. And that's where the spreadsheet comes in, guys. Posting in the room is probably one of the most important things you can do. But using this spreadsheet, it's given to you every day. It was given to you when you downloaded the software, guys. This spreadsheet is work. This spreadsheet takes effort. But the first tab of this spreadsheet is your trade journal. Every trade that you take, win, lose, or draw, and guys, if you're on simulator, lose a lot, but make sure that you annotate and post in why you're losing. And the most important thing that you can do, guys, when you take these trades and put them in there, is go back and study them. Look at what you did yesterday so that you can be better today, guys. If you wake up this morning and you trade into termination conditions all day and you lose your butt, Monday morning you better wake up and look at those pictures and say, oh my gosh, trading into termination conditions is not serving me well. That is not what I need to do. And it's going to prepare you for the day. And then the second thing is you're going to have to say to yourself, what is bringing me success? What are the things that are working for me, right? And Joel, following your rules works absolutely amazing for you. I've seen every one of your charts. When you choose to follow your rules, you find success. I've seen it. I've been watching it for years. When you form an opinion, it whips your ass. So you need to wake up every morning and take a giant black Sharpie and write it on a piece of paper. Hey, Joel, follow your damn rules. Breaking them doesn't work for you. And you need to focus on that. You need to focus on that. So, guys, take your pictures. There's the link, how to post them in the spreadsheet, how to annotate. And guys, Nexgen Ben just dropped a message in here. Ben's been with us a while. He says, good morning all. I just popped in because a buddy of mine took a break and is motivated to give it another shot. The first thing I heard was, I've been here for 2 years, etc. It takes as long as it takes, and trust me when I say it's absolutely worth it. When you figure out how to get out of your own way and listen to the markets, follow your trade plan, and get paid, your life will never be the same. Sup. Amen, Nexgen Ben. Amen. So guys, I love it when the experienced users come in and remind you, all you got to do is follow the plan. It's amazing how it works out. And Ben rides motorcycles, so you know he's honest. Guys, the second tab of this spreadsheet are your 101 rules, are that high probability trend trade rules, broken down. Green section, green section, green section. Rule 1, 2, and 3. What it looks like, what it means to you. And I'm going to give you a tool to take advantage of this, to fill it out yourself, to create that awareness. So this is where I say, if you've been listening for 2 years but not working for 2 years, get to work on your spreadsheet, please. There's a favorite looks as you begin to develop your plan outside of that high probability trade. And then finally, guys, there's the client trades. So if you're studying the high probability trend trade, there's a lot of them in here, almost 400 that you can study and look at and begin to learn the looks. There's the entry sequence for the short, for the longs, high probability trend trade. There's management. There are patterns that repeat themselves, guys, and a whole section dedicated to that rule number 2, that termination conditions, because that is the most broken rule. People tend to be impatient and they want to trade into these areas. There's no reason to. And that may be your thing. So post in the class, please, please, please. Guys, you can't overpost. I'll run late. This is my only job outside of trading. Post your trades in class. Use that spreadsheet. Fill it up. I mean, fill it up. And more than anything, keep it simple. Tell me what you see, so if it needs fixing, we can fix it. Go back and see what you did so that if it needs repeating, you can repeat it, guys. And we're going to break it down. 3 rules. That's it. 3 rules. There are no amendments, addendums, no ifs or maybes or buts. It's just 3 rules. And the first one is the one that leads the way, guys. Momentum. Momentum is rule number 1 for a reason. Momentum is defined on the large chart through strong triggers. And that means that when you open up your large chart and you look at it, you need to say to yourself, is the market going up or down? If the background is green, the market's going up. You should be looking for rules to be met for high probability trend trades long. Avoid the temptation to try to be first the other direction. You don't need to. If the background is red, it's going down. Look for rules to be met for high probability trend trade short. And strong triggers in an uptrend means that your small triggers, these solid lines, have broken above and away from your large triggers, these dashed lines. And it's the space created between small and large that lets me know the odds are favorable for the market to continue up. And when I have this odds favorable momentum, I can use the smaller, faster chart to pinpoint that entry. On a large chart, it looks like a tail. You're going to be able to pinpoint exactly where this tail is most likely to form on that refinement chart. That's what's going to get you into the highest probability trend trade possible. In a downtrend, smalls below the large, larger wide, space between. The odds are favorable for the market to continue down. You'll be able to pinpoint where this tail is most likely to form. It's actually going to be your entry for the highest probability trend trade. You'll use these tails as a study tool later on. But guys, when you have odds favorable momentum, OFM, you'll see it on charts all day long. Odds favorable momentum pushes that market in the direction of the trend. Odds favorable momentum gives you the potential to break those key areas. Odds favorable momentum will even cover some of the mistakes or the chances that you're willing to take on some of your entries, guys. Odds favorable momentum is so easy to recognize, and it always has been. On the most current bar, the small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Can you give me a Y in the room, please, ladies and gentlemen, if you see I do have odds favorable momentum to the downside? One of the most important lessons you'll ever get, guys. This is a market that's likely to continue in the direction of the trend. This is a market that has the potential to break this key area, and this is the market that has the potential to cover some of the mistakes that you guys can make. There it is to the upside, and the market pushes up. And let's scroll back a little bit, guys. And when I told you that trading isn't the easiest way to learn this, doing a little bit of work. Odds favorable, and look how the market continues down. Odds favorable, and it pushes up. Guys, odds favorable momentum should lead the way. This is the one that I won't do without. But momentum doesn't last forever, guys. Small triggers begin to return to the large triggers. Once they work their way inside, once those scissors, right, looks like scissors open, once the scissors close, your momentum is gone. Your advantage is gone. This is what we call a weakening of the large triggers. And ladies and gentlemen, when you have weak large triggers, anything can happen up or down. You're sitting on a fence and you're waiting for a strong breeze to push you one way or the other, and you don't know which one it's going to be. Guys, odds favorable, anything can happen. Strong, weak. Your job is to learn the difference between the two and to commit to the one that creates the advantage. So that's rule number one. Pretty simple, right? Easiest lesson you'll ever get. Has nothing to do with the price bars, has nothing to do with the areas, the mid-band doesn't come into play. It's simply smalls above the large and space between, smalls below the large and space between, guys. So that's rule number one. I love that advantage of momentum. That advantage of momentum makes me as happy as I can possibly be. But once I have that advantage, I've got to make sure that I've got room to my profit targets. I'm going to do that by not trading into areas that may reverse the market. No termination conditions, guys. This is going to assure me the clear path. Rule number two uses horizontal lines on a large chart. That's the easiest way to say it. Everybody wants to know, well, how is it made? Where did it come from? Who cares, right? If you see a divergence high line, a magenta line that prints off of a pivot, it means that there was a loss of momentum. I gave you guys the map to this in the room. But this line could stop the market. It may stop the market. It might stop the market. Divergence low line. If there's a loss of momentum at this pivot, this line prints. All it is a loss of momentum, but that line could stop the market. Fibonacci resistance. When the market is trending up, this red line represents a point where the market may stop, bounce, or reverse completely. You'll never know. And the same is true of Fibonacci support, the blue line down here. When price is trending down, the area is reached, it may stop the market. It may create a fight. Large crowd, big chart reacts to these key areas, one-to-ones as well. So in order to determine whether or not an area has the potential to stop the market, is likely to stop the market, may stop the market, not as guaranteed absolutely to stop the market because there are no guarantees, the first thing that has to happen is price reaches the area. Your dynamic Renko bars, your price bars reach that high level, that Fibonacci resistance, that magenta divergence line, or even yellow one-to-ones. And when price reaches the area, all you have to do is ask yourself, where are my triggers? And if your triggers remain below the area of resistance, resistance may reverse the market. It may stop the market. It might create an untradeable bounce and then continue. But the reality is, you will never know what that outcome is going to be. Nobody sends out a message or a fax. There's no smoke signals, guys. It may reverse the market, therefore your advantage is gone. No trades into that area. Rule number 2 is not met. And then if it does reverse the market, if none of the triggers get through and it reverses the market, we're going to call this a strong top. And a strong top is a precursor for some of the greatest things to ever happen going the other way. Trades are more likely to win. And then it pushes all the way down to Fibonacci support. And you all ask yourself, where are my triggers? And if your triggers remain above this area of support, rule number 2 is not met. No trades into that area, guys. It may reverse the market. It may stop the market. It may create an untradeable bounce. This is the most basic way to avoid trouble. Is everybody good with this? First price reaches sets off the decision process. Where are my triggers? If they're below resistance, above support, it's okay to sit on your hands and do nothing, guys. And every line that you reach will be a termination condition, at least for a second or two. So you just have to pause. When I told you that you would understand where the market is likely to go, if you're in a short position and you see this big blue line looming in the distance, this becomes an outstanding place to get paid to take profits. Areas break all the time. Areas break all day long, guys. And an area is considered broken when the small triggers and the large triggers get through the area. So price comes down and reaches Fibonacci support. The triggers remain above. Guys, this is a termination condition. You can't go short. Even with the momentum, it may bounce. But once your small triggers and your large triggers get below Fibonacci support, this is what it takes to say the area is broken, my path is now clear. Don't get sucked into the color of the fibs. We talked about that yesterday. The color of the fibs has nothing to do with it. It is trigger location. No trade, trade away. Your path is clear until you reach the next area. Price comes up, reaches resistance. Triggers are way down here. I'm not trading into that area. It could stop things. Once the small and the large get above that area of resistance, it behaves as support. The path is clear until I reach the next line. And guys, it really is that simple. It's either going to be a termination for the brand new user, or it's going to be a clear path. Let's look for the rules to be met for entry. And it's these two looks that are going to set you up for the second trade that I teach you. And this look that I'm about to share with you is going to be the majority of your trades, guys. When your small triggers absolutely smash through the area. And guys, I use that word, smash, because we want them 2 to 3 points above. When the small triggers absolutely smash through the area, but your large triggers are lagging behind. They're still below. What this is what we call a 50-50 trade, guys. A 50-50 look. 50% of your triggers have made it through, 50% have not. This look, with odds favorable momentum, means that fib has the potential to break. That's all it is. Just potential. Rule 2 is not met. Rule 2 is not met. This is never, ever a clear path. All it is the potential to break, guys. And this potential to break happens a lot. I'm going to hand you a plan that gives you the best chance of taking it with the highest level of success. But I want you to see something. Here's the S&P, and I'm going to go back to today's market. Price comes down, support has the potential to break, but rather it creates an untradeable bounce. Potential to break directly into a termination, 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 termination. Holy smokes, thanks rule number 2. You're keeping me out of a lot of nonsense. The market comes down. This area has the potential to break, but it does not. Market goes up. This area has the potential to break, but it does not. And guys, I'm telling you, there's a great way to take this. The potential is going to happen all the time. And that's what we see right here. Potential to break, still the potential to break, still the potential to break. And there just may have been a couple opportunities in here to get paid in between the little dance. So that's going to be your second trade, guys. So brand new users, it's either a termination or it's a clear path. Commit to that for a week as you learn termination conditions, and then understand that once you can tell the difference, Once you understand that look of momentum, it opens the door for you to take that 50-50 trade. And I will give you a very solid plan to take it. But I want to show you something. This is a high probability trend trade. This is 3 rules, 3 advantages. This is the best of the best. The 50-50 trade removes one of your advantages. So I'm going to give you a plan that keeps you focused on momentum, that keeps you focused on your entry area. And what happens is when you begin to speak to yourself in terms of advantages, you know exactly what you're up against if you choose to take a medium probability trend trade. You put on a different hat. You put on a management hat. You get aggressive. You take quick profits. You get to a 0 loss level as quick as you can because you know it's not the best of the best. And that's kind of your next step in the progression. Sometimes the path won't be clear for quite a while. You're going to see an area of support followed by an area of support followed by an area of support. And you're going to have to say to yourself, dagnabbit, I can't get a clear path. I'm not taking a trade. Guys, this is 90% of your day. 90% of your day is doing absolutely nothing. And once you accept that, life gets pretty easy. And it's okay to do nothing. The futures markets trades billions of dollars every day. If you can capture $400 a day, that's it, just $400 a day, you're making 6 figures that year. Pretty cool, right? It doesn't take every dollar. It doesn't take every tick. So we're going to focus on the best dollars, the best ticks, the easiest ones to grab. And it's okay to sit on your hands and do nothing. And rule number 2, and we just saw it on the S&P, rule number 2 shows you exactly where the driving forces in the market are likely to react, guys. And you can make a decision to stay out of their fight. And rule number 2 is going to keep you out of consolidation. It's going to keep you out of chop. Exhibit A. Guys, this was this morning, last night. The S&P created a very clearly defined area. And guys, when you get consolidation like this, these attempts at breakouts don't always work. There's 3 failed 50-50s after consolidation. Someone's going to win. But this is a fight that I don't need to be a part of. This is a fight. I don't have a skin in the game, guys. I don't want anything to do with it. I want to wait for the best of the best. I want to wait for my momentum. And I want to get that clear path as a brand new user because I understand. Once I understand these 2 concepts, I have everything I need to build a consistent plan. I have everything I need to stay out of trouble. I have everything I need to get into the market when the market is likely to push. So guys, these are your first 2 rules. Can you give me a why in the room if you're with me so far? If you're starting to say, yeah, okay, momentum seems pretty cool. I can not trade into lines. It means you got to do nothing, but I'm telling you right now, guys, we're learning the best of the best. Once these rules are met on the large chart, once the large crowd shows me what they want to have happen, I'm going to go look for an entry area, guys. I'm going to go to the small chart, the faster chart, the refinement chart. And here's the one thing that I want you to keep in mind. When I go here to look for an entry, if I see this, if I see 3 divergences in the same price range, 3 cyan lines from a low, 3 magenta lines from a high, guys, this is the small chart, the faster chart, showing me a little bit of change that I can't see on the large chart. And 3 divergences in the same price range may terminate the trend. It might stop the trend. It could stop the trend. It could create a fight. But this look is the only time on a small chart that I will let the small chart keep me out of a high probability trend trade. If I have momentum, if I have a clear path, it takes 3 divergences on the small chart to keep me from pulling the trigger. If I am in a trade, and 3 divergences come to be, this is a big red flag. Let me exit that trade. Let me get out. Let me preserve my equity. Let me keep the powder dry. I'll wait for the next best trade. That's the only time a small chart will tell me don't take the trade. But when I have momentum and a clear path, Kenny, the KISS plan says at trouble. First contract off at trouble. So that might be $50. That might be $150. So it's going to be individual. You're going to have to read your indicators. You're going to have to look at your charts. You're going to have to be able to define that trouble. That's why we learn to read them first and why that is the second trade. You never know, Hong. You don't know. So Hong, right now, you're sitting in your house, warm and cozy, doing great, right? You don't know if a plane is going to crash through your roof. So you just go about your business as though it hasn't happened. But if I'm in a trade, Hong, let me go back. If I'm in a trade and I see one divergence, right, I'm taking the trade. And if I see two divergences, Hong, in my brain, what I'm saying to myself is I'm still good, but I go instantly into this thought process. If a third divergence prints, I'll exit my trade. So understanding my rules, understanding that 3 divergences could kill it, it puts me on alert. And if it never happens, guess what? I never exit. But if it does happen, I have a plan to exit that trade if it does. Does that make sense? You'll never know if a third divergence is coming. You'll never know if an area is going to hold or break. You'll never know if your trade's going to win, which is why we have rules, because rules keep us from having to know what's going to happen next. Only after the third. For you brand new users, only after the third, Hong. Pretty cool, right? And what you may do as a brand new user, and I think every one of us are guilty of it, right? Raise a hand if you've done it. You say to yourself, I think that divergence is going to print, and you exit the trade, and then it never does. And it does exactly what it was supposed to do. Nope, Hong, you've only got 2. Whoops. Watch the... Oh, no, I just closed it out. My bad. Let me reopen my workspace real quick, guys. I just X'd out. And I'll open it up. Yeah, Jen, me too. That's why I'm so good at teaching this room. So, Hong, you said it looks like it's happening right now, right? Because there's 2 divergences already. We'll let that load up. It's calculating, so give me just a second. Good morning, Andy. But until the third line prints, Hong, it's just not a thing. I don't count anything as divergence except a pink line that's printed. Divergence it's very definite. So right now I've got 1. That's it. Nope, that's Fibonacci resistance. This is Fibonacci resistance. It has nothing to do with divergence, Hong. So Fibonacci resistance, here we go. Let's go back to this one, right? Fibonacci resistance, these Fibonacci lines are a result of thousands of calculations. These show potential tops and bottoms. Divergence means that there was a loss of momentum at a pivot. So the only time I have divergence is if that negative number prints, which means nothing, and that line extends out. That's the only time that I have divergence. So right now I've got 1. Down here, I had 1, 2, 3, and look how the market went up. Isn't that pretty outstanding? So until that third line prints, don't even worry about it. Who cares? But of course, we're going to respect the termination condition. Did we just have an aha moment? I love it when you guys ooh and ah in the room. That makes me so happy. So make it print. Force it to print. Don't try to anticipate it. Let's go find entries, guys. My large chart says momentum. My large chart has a clear path. My small chart does not have 3 divergences. I'm going to use a limit order to buy or sell a pullback, that little push that the small crowd creates. And I'm going to use that limit order at an area. I'm going to use fibs, midbands, and yellow 1-to-1s. None is more important than the other. I'm going to say that very clearly. They are all equal. Fibs, midbands, and yellow 1-to-1s. But here's the key. I want them inside of trigger lines. Initially, brand new users, inside of what we call favorable large triggers is the best of the best. Inside of large and synthetic triggers that are overlapping one on top of the other, two snakes riding piggyback, is the best of the best. I teach this class in this trade and give you the absolute best case scenario. It won't always be this pretty, guys. But price returns to large triggers. Price will return to large triggers on the small chart. Price will return to large triggers on the large chart. So when the small chart large triggers and the large chart large triggers, these synthetics are close to one another, there's not a lot of room to shoehorn areas inside of it. So my small chart price may correct is the word that I love, to the large triggers. I have one-to-ones and I have Fibonacci support inside of those triggers. These may create a bounce. Price may return to the triggers, but these areas may create a bounce. But then remember, I've got two charts. So my synthetic triggers, the large chart large triggers, price may return to those. I've got a mid band inside. That may produce a bounce. So I've got two sets of triggers in three different areas. So from the highest point of support to the lowest point of support inside of those triggers, this red box, this is what we call the window of opportunity. This is the point where the market is most likely to bounce, where the small crowd is most likely to fail. And notice that it's not a one-tick area, guys. This is three separate lines in between two triggers. This becomes the best of the best. And when your trigger lines are favorable, when they're one on top of the other, your window will be its absolute smallest. All you have to do is go through this simple process to determine where to put that limit order. So when the large chart says up, when the large chart has odds favorable momentum to the upside, when the large chart has no termination conditions, this is what your small chart's going to look like, ladies and gentlemen. It is going to be screaming off in the distance, leaving you behind. And your fear of missing out is going to kick in. Your fear of missing out is going to be like just, your palms are going to get sweaty. You're going to start feeling left out. You're going to wonder why you're never going to make money. And then the small crowd fights. And that fight begins with a reversal bar. This reversal bar is not the entry for the high probability trend trade. This reversal bar signals the beginning of a pullback, the beginning of that retracement. So once this reversal bar prints, you're going to find your trigger lines, large and synthetic. It doesn't matter if the large are on top of the synthetic or the synthetic are on top of the large. Draw a circle, draw a box. The red box shows me where my trigger lines are. And now I'm going to find the areas within, inside the trigger lines. Fibs, mid bands, and yellow one-to-ones. I have a mid band up here. It may create a bounce. I have yellow one-to-ones down here. This may be the bounce point. So I create a window from the highest point of support to the lowest point of support inside of favorable large triggers. Is everybody with me? We have just defined where the small crowd is most likely to fail. We have just defined where this market is most likely to bounce. But because of the advantages on the large chart, your job is to activate a limit order a couple ticks above that highest point of support, because we're not going to trip over a couple of pennies hoping to grab hold of a couple dollars. This becomes your entry for the highest probability trend trade long. Any line below the triggers, any line on what I call the wrong side of the triggers, this is not a part of the equation. And Hong inspired me to make this picture the other day. I'm going to do it again because I thought this was a great lesson. On the small chart, I expect price to make it inside of these triggers. On the large chart, I expect price to make it all the way to the bottom of these triggers. New color. On the small, I expect price to have the potential to bounce off of a mid-band, but I also expect price to have the potential to bounce off the one-to-ones. It's not an exact science, but it can be very precise with favorable large triggers. Anything beyond that correction point, anything south of these triggers is outside of the window of opportunity, is not where I want to be in a trade. This is what we call where the market should not go. If this trade is going to win, it should not go below these triggers. for a short trade. Large chart says down. Large chart says odds favorable momentum. Large chart has a clear path, guys. It is so important that your large chart rules are met to take this high probability trend trade. Wait for the reversal bar. The reversal bar signals the fight, the beginning of the retracement. Find your trigger lines, large and synthetic, hopefully one on top of the other. Look for the lines inside. Guys, there is one line. There's a mid-band inside of favorable large triggers. I expect price to return to the triggers. I expect this line to potentially create a bounce. My limit order goes 2 ticks below that line. And if they get up to me, I'm in a trade, guys. I'm in a trade with every advantage. Every line beyond the trigger lines, every line on the wrong side of the trigger lines is out of the equation, guys. I don't want the market up here if this is going to be a winner. And these are your entries. This is defining where the market is most likely to continue, guys. That is all we've talked about this morning. I don't know what you're saying prior divergence, Pete. Once you can define where the market is likely to continue, once you can define where that bounce is most likely to happen, once you can define where the small crowd is most likely to fail, you know where the market should not go because of the rules. It should not go generally 4 to 5 ticks. It doesn't matter. Divergence is not one of the areas, Pete. Divergence is not a Fibonacci-based indicator that we can use for an entry on a high probability trend trade. It is fibs, mid-bands, and yellow 1-to-1s. That's it. Don't overthink it. Don't add rules to this trade. Let it be what it is, guys. Your first stop, your stop placement will go 4 to 5 ticks above the trigger lines. Before you ever enter a trade, you'll know exactly where your risk is. Before you ever enter this long trade, before it ever gets to your limit order, you'll know exactly where your stop should be. You can decide whether or not you're okay with that risk. But the great thing is more often than not, with all of those advantages, the market gives you a reversal bar in the direction of your trade, a confirmation bar, if you will. Your first stop movement will be 2 ticks above that reversal bar, or 2 ticks below that reversal bar. So it's your ability to define where the market is most likely to continue that allows you to define where the market shouldn't go so that you can create intelligent stops. Is everybody good with this? This is the beginning, guys. This is my first hour every day because great entries create manageable trades. I'm teaching you the best possible way to enter the market on the high probability trend trade. This is the easiest look. But this is not always the look. I woke up inspired, guys, so I added to the lesson. Price returns to large triggers. Price returns to the large triggers on the small chart. Price often returns to the large triggers on the large chart. Do you see how the triggers are split? I have 2 correction points. Does everybody see this? You're going to get this a lot, guys. You're going to have to navigate this entry eventually. I have 2 spots price may return, large triggers and synthetics. This is the correction point. I have 2 areas that may create a bounce. Paul, I made this morning, brother. It might bounce off of a mid-band. It's not inside the triggers. It might bounce off of this line inside of the triggers. The correction point is from the top of these triggers to the bottom of the triggers, guys. That's a lot of indecision. And if my stop has to go below those triggers, that's a lot of risk, isn't it? Does everybody see that? You're going to see this split trigger look a lot, guys. It's going to happen a lot. So this is where I introduce the idea. When there's a lot of space between triggers, when there's multiple areas, you can use a reversal bar for entry. You can wait for this confirmation bar going in the direction of momentum, going in the direction of the clear path. Using a reversal bar does not assure the win. Using a reversal bar does not guarantee that it won't go to the second correction. What it does do is it gives you defined risk. If you choose to enter on a reversal bar, yep, I got it, Paul. That's what inspired the lesson. If you choose to enter on the reversal bar because it's a little sketchy, You've defined your risk 100%. And there's a cost of confirmation. You're in up here, not down here. And guys, this doesn't mean that it won't just turn around and come to the second correction point. There will be times where you have to take trades twice. But this confirmation bar gives you established risk when the entry isn't perfect. Does that make sense, everybody? And the easiest way to do that, Paul, I dropped this in the room. Dun, dun, dun. Oops, wrong one. Sometimes you have to wait for confirmation to enter, guys. Sometimes you're going to wait. You're going to insist on that confirmation bar. So you can use what's called a buy or a sell stop order. And what that'll do for you, if you're demanding confirmation, is you can click above the current price for a long, and it'll be your third option on NinjaTrader 8. And you'll be able to place that order on the reversal bar marker, guaranteeing that NinjaTrader's reaction is quicker than yours, getting you in on the reversal bar. It also keeps you from trying to anticipate a reversal bar. And the same is true for shorts. So you're going to, if you need a reversal bar to go up, activate that limit order or that buy stop right on the reversal bar marker, right on the reversal bar marker. And guys, what this does for you is it guarantees that you're patient. It guarantees that you wait for that confirmation. But learn it easy first. I added that in because I see a lot of people get run over on these split triggers. So one of the things that I like to teach is it's okay to wait for confirmation. It's okay to pay for that one instead of hoping that an area holds. But you've got to learn to define your entries. And the easiest way to do that is to go and study, not to take trades. Trades are freaking terrifying for brand new users. Go back and study, guys. Every time your large chart has momentum and a clear path, or even just that potential to be clear, and you see a tail, circle it. If that tail lines up with an area inside of favorable large triggers, you have the best of the best, highest probability trend trade that is taught in the first hour every day. You could also use this, maybe it's split triggers, and you could say, let me see where the confirmation bar was. Let me see if it worked. And guys, you've got to study. So let's do this just for grins. Here's one of those odds favorable momentum, potential to break. I'm going to circle a tail. I'm going to come back to my small chart. I've got triggers down here. I've got triggers up here. I have absolutely no idea which one is going to stop the market. Is everybody okay with the idea that you have no freaking idea which one's going to do it? So if you wait for a confirmation bar, you get in here, and then divergence prints on a 50-50, and most of you won't take it. But if you're still going to take that trade, you may have to take it a second time from the higher correction point, from the higher area. And this gives you the opportunity to capitalize all the way down. And then those multiple divergences start to print, and you know that that party is probably over. Does that make sense, everybody? We're going to learn how to enter the market because great entries create manageable trades. Where on earth is my small chart? There it is. So crude oil was just moving and shaking this morning, caught in between two areas. But let's go back here and let's look at a potential to break. All I'm going to do is circle the tail. And if I scroll back, and this was in the middle of the night, goodness gracious, don't you guys ever sleep? Because Hong, my large chart leads the way. Here's a great example. Do you see anything on the large chart that says up? Is there anything on the large chart that suggests a trend reversal? You've got the strongest momentum ever. You've got a termination that reversed it. You've got the widest triggers and the potential to break. Everything on this chart says down, right, Hong? So let me show you something. I'm going to put this circle around these two bars. Look at all of this nonsense that happens on the small chart. Remember, this is just a refinement chart. It's just an entry chart. That's all it is. Let the large chart lead the way. And the large chart says, Hong, we're going down, we're angry, and we're not going to let a damn thing stop us. And if you got in at the pullback, right at resistance, right at the triggers with the confirmation bar, there was an opportunity to make some money before maybe 3 divergences takes you out. So there's a reason that the large chart leads the way, because it is hard to stop the large chart. So with that look, potential to break, all the momentum in that one bar, boom, 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 we get a cute little snapback right to support inside of favorable large triggers, and off it goes to the races. Let the small chart be a refinement chart. Let the small chart be a refinement chart. Ben, I was wondering what the hell you were typing. I'll let everyone read that until I get a chance to read it. You might be drunk this morning. I don't want to read it out loud, not just yet. Does that make sense, Hong? That's why I say every day the large chart leads the way. Because the large chart's not going to blink a whole lot. The small chart is going to have us define an entry and help us reduce our risk. And this is one of those great examples when the triggers are split. Waiting for a little confirmation lets you capitalize on the move, and your risk is here rather than here. So there is this awesome idea. And I put this together just Googling. I love the Google webs, guys. 6 signs that you're maturing as a trader. And this is what we're all going for. I'm only going to read the first one. You manage risk and then you manage reward. And then that's the only one I'm going to cover. Because you guys are managing risk by insisting on odds favorable momentum. You guys are managing risk by being adamant that there's a clear path. You guys are managing risk by taking the correct entries. And it's that management of risk that makes it easiest to reap the rewards. So focus on the process a little bit. There will be a million what ifs. There will be a bajillion but marks, and that's okay. Keep it simple first, guys. And in order to get to where you want to be, you're going to have to learn these very basic looks. And you're going to have to commit them to memory, so much so that you can analyze your chart in a matter of seconds. And you will be able to manage and read your indicators in a matter of seconds. But to get to where you want to be, guys, it's not listening for 2 years. It's not watching my videos for a year. It's not hoping that you will miraculously become a confident trader through osmosis. Guys, it's putting in the work. Taking 25 pictures of strong triggers and weak triggers so you never mess up rule number 1, so you always know the advantage. It's taking 25 pictures of a clear path and of termination conditions so that you never confuse the two. And taking 20 long and short, high probability trend traders, right? Trend trade entries so you know exactly what you're looking for and where you're looking for them. And guys, it's not enough to just take the picture. You have to incorporate the whys. You have to annotate your chart. You have to write on your chart, these are strong triggers. Let's go to the 101 here. These are strong triggers. Well, that's great. Why are they strong triggers? They're strong triggers because the smalls are below the large, because both are wide, because space between means odds favorable momentum, because these strong triggers tell me that rule number 1 is met. And I promise you, if you take 25 pictures and you annotate it this thoroughly, you're not going to screw up strong triggers. You're always going to know when you have that advantage of momentum. And then if you go through and you take 25 pictures of weak triggers, smalls inside of the large means weak. Anything can happen. My advantage of momentum is gone. How often do you suppose you're going to get caught trading without momentum and losing a trade, right? And the same is true on entries. Making sure that the areas are inside of favorable large triggers, guys. So this first one, is designed to get you exactly where you want to be. You're going to piece together these individual concepts to create a trade. I'm going to give you each picture for the rules being met in this high probability trend trade checklist. Use it to check yourself as you take these pictures. Use it to police yourself as you're looking for a trade. And more importantly, if you can't seem to look at this, you need to raise your hand and ask in the room, right? But this talks about this is momentum and this is weakness, and the two will always be different. Don't confuse one for the other. This is a clear path, and this is a termination. Don't talk yourself into believing that potential is a clear path that needs to be managed differently. There's your entry. This is where the market shouldn't go. There's your entry. This is where the market shouldn't go. And then I'm going to give you the trend trade checklist. It's on the second page, guys. And you know what? This is killing my OCD that is. There we go. So much better. These are the rules for entry, guys. Is the market coming from a strong top or bottom? You can take it without, but you're going to watch those divergences. Odds favorable, clear path, area inside of favorable large triggers. Nobody in the history of this checklist has been able to mark yes truthfully and do worse than 70%, guys. But this is a high probability trend trade. This is a trade that happens 3 to 5 times a day. That's it. Which means that you have to focus heavily on getting good at this one so that you can open the door for other opportunities, because nobody in this room is content doing absolutely nothing for 90% of their day. And that's why the KISS plan was developed. This is going to keep you focused. And guys, I see a lot of names in this room that haven't been in here a while. If you're struggling with consistency, if you are struggling to win more than you lose, if you're nervous about your entries, if you're nervous about your management, this KISS plan is a freaking amazing thing to resort back to for a week to rebuild your confidence, guys. This is a stepping stone in your learning journey. The high probability trend trade is your first trade. That's it. It's not your only trade. It's the best trade, the easiest trade, the most advantaged trades. This is the one that's designed to optimize your chances of success. Through simulation, study, class feedback, and continuous practice, Ed, you'll be empowered to craft a plan tailored to your personal goals based on your experiences reading the indicator. That's AI telling you that once you learn this basic trade, with a little bit of work and a little bit of feedback, guys, you're going to find a lot more opportunities. Ron in the room says it every day. Once this trade is second nature, you'll see patterns you didn't even know you were looking for. You'll find ways to make money. Your simple plan for consistency. Never fight the large chart, guys. Never fight the large crowd. Let the large crowd be the reason you choose a direction. Let their momentum be why you're going that direction. Let the fact that they haven't reached a key area be why you look for an entry in the first place. Because the large crowd, here's Norbert, this is for Ron, are sharks, they're predators. These are the people that create the trends, that establish the momentum. These are the people that if the market's really going to reverse, they'll make it happen. Our job is to be a remora, to follow behind the people that are making things happen. And once they establish our advantages, we'll take a little bite. We'll make $200 to $300. We'll get the hell out and we'll wait for them to feed again. And if you try to be first, if you fight the large chart, there you are going right down the gullet. You are an appetizer, guys. So don't fight the large chart. Define your entry. All we've talked about so far is entries. We haven't talked about how to manage it. We haven't talked about second chances. All we've talked about is getting into the market where the market is most likely to continue, because great entries create manageable trades, guys. And your great entry means that you entered where the market is most likely to continue. It means that your first stop is where the market should not go. And guys, this is the basis for your management plan. And in the beginning, your management plan should be just as mechanical as your entry. Your management plan should be nothing more than if-then, guys. This is going to eliminate a lot of fear and a lot of opinion. So You will create a management plan tailored to your personal goals based on your ability reading the indicators. Guys, your management plan is going to change once you can read your indicators, once you can make decisions quickly. So initial stop is where the market shouldn't go. And you're either going to get stopped out or you're going to get a reversal bar. And guys, I can't stress this enough. It's okay to lose trades. Lose the right trades. Lose the trades with advantages. Lose the trades with the patterns that have been proven to win more than they lose. It's a cost of doing business. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. But if you get that magical reversal bar, ladies and gentlemen, your new stop is 2 ticks above it. You have already reduced your risk. It doesn't guarantee a win, but at least now you lose less if this one doesn't work. Your targets are predetermined. Target 1, target 2. And target 1 is a measly $100 away from your entry. That's it, $100. And this is where I get the objections. Mark, it's ridiculous to put risk on a trade for $100. Well, maybe in your mind. But guys, remember that the goal of trading is to get paid. The goal of trading is to put more into the account than you let fall out. And $100, if I'm walking down the street and I see a $100 bill, I'm picking it up. I'm not going to step over it and say to myself, man, what a stupid denomination. Maybe if someone will drop 10 more, I'll bend over, right? So take that $100. It goes into your account. This is what creates confidence, guys. This is what sets you up to feel great about these entries. It's this victory that allows you to sell a market when it's on the way up. Guys, this is the one that dries your sweaty palms. This is the one that gets those butterflies out of your gut. And once you hit that target, you're going to move your stop to break even, brand new users that don't have a trading plan yet. You're going to go break even. And you're going to say to yourself, you know what? I just got paid. I've got absolutely nothing to lose. Let me use this opportunity to learn how to trust the large chart. Let me use this opportunity to believe that odds favorable momentum and a clear path is likely to push that market down. And I'm not going to touch my stop. I'm not going to adjust my targets, and I'm either going to get stopped out break even, or it's going to go to my second target. And if it goes to my second target, guess what? $300 in my account. That's it. Guys, there is no reason to exit that trade other than $200. That's it. It's a predetermined target that is designed to get you paid, that is designed to get you confidence, that is designed to put you in a position to learn how to read your indicators. That's $300, guys. And if the best you can do every day is $300, that's a $75,000 year. How cool is that? Only $300 a day is a $75,000 year. But guys, there's trade copiers out there, right, Ben? If you made $100 a day, that's $25,000 a year. If you do it on 10 accounts mirrored through a trade copier, that's $1,000 a day. That puts you at $250,000. Guys, there's Nexgen users that make $3,000 to $4,000 a day, and then they do it on 20 accounts. The goal is to learn how to get paid. But the one thing that you have to know before you enter the market, before you try to become this successful day trader live, you have to know why you're going to enter a trade. In the beginning, that's the KISS plan. The KISS plan puts you in at the best of the best. Why will I exit my trade? You have to have a reason for exiting. Otherwise, you're prone to emotion. Commit to having the rules met, guys. The rules are patterns that have been proven to win more than they lose. If they have not been proven, validated, verified, why on earth are they in your rules? I see you guys all the time taking trades. I hope it breaks. It should break. It might break. Guys, just let it be the pattern that wins. The more consistent in action you can become, the more consistent in profits you'll likely to become. Your process yields results, guys. It's not your desire to win that produces winners. It's not your need to pay the mortgage or buy the new motorcycle or the new Camaro. It's the process, guys. Learn how to win, learn how to get paid, And the rules are going to help you remove the emotion associated with trading. So if I'm in a high probability trend trade, I knew exactly what it's going to take to get me in. And now as a brand new user, I know exactly what it's going to take to get me out. As you grow with the software, as your management plan changes, guys, there may be other instances that you look for. But until you can do that, keep it very simple. So my promise to you guys was that I would give you everything that you need to be successful with the software inside of the first hour. I went over 15 minutes. You now have the daily goal sheet reminding you that it doesn't take a lot to make a lot. You have the exit conditions reminding you that you need to know why you enter and why you exit. You have the high probability trend trade checklist, so you have something to print out, put on your desktop, a way to police yourself as you go back and study these looks. You have the KISS plan, giving you the ability to take the highest probability trend trade that is taught and learn how to read your indicators. You actually have my PowerPoint in PDF form so that you can go through and look at the pictures that I teach with. And if you have a question about them, you can take a picture of them, drop them in the room and say, Mark, what the hell does this mean? And then finally, you have Chart Reading 101. You have Chart Reading 101, learning to read your indicators. And once you can understand the high probability trend trade, it opens the door for the 50-50 trade. That potential to break trade, guys. And it gives you a set of rules that rely on your understanding from the high probability trend trade. The management is different. It's a different trade. The entry rules are a little bit different. It's a different trade. So learn one thing. Get good at it. And it'll be a week before you begin to incorporate these second trades, guys. And that's my first hour. That's it. That's what we do every day. Every day. We talk about 3 rules. Every day I give you everything that you need to study them. We talk about the advantages. And I do this every day because I firmly believe that repetition is the key to recognition, guys. The more you do something, the more work you put in, ooh, that dreaded 4-letter word, the quicker you're going to get to where you want to be. The path has been proven. It's been verified, validated, stamp of approval, guys. To get to where you want to be, ASAFP, post your trades in class. Get me your pictures and tell me what you see so that we can get you chart reading as soon as possible. Take those pictures, study those pictures, annotate those pictures, and let that visual memory make it easy to recognize what you're looking for in the moment. Because when this chart opens up and I look at it, I have to say my large triggers are down, but my small triggers are up. This may not be my best look for momentum. I definitely don't want to go long in determination conditions, even though the small chart looks like it just pulled back to a mid-band. Guys, letting it be perfect. Letting it be the ideal situation. Anything can happen triggers right at Fibonacci support. What do you guys suppose might happen here? Is it possible that this could create an untradeable bounce? Is it possible that this could reverse the market completely? Is it possible that not having an area inside of those triggers is a big red flag and maybe we should pause for just a moment? And guys, it really can be that easy. First, I talk about momentum, and I have none. And then I talk about a clear path, and I have none. And there's no reason to look over here, not even a little bit. And it blows right through the area that is not inside of favorable large triggers. Guys, this isn't a trade. This is you realizing that the rules work and they will keep you from giving away money when you shouldn't be giving away money. And then the best lesson I can give you. Yeah, Joel, but you can also get it right, right? So say that. Say, I am kick-ass 70% of the time, but I'm still working through, following my rules every time. All right, guys, the most important part of your day. Go stretch your legs. I'm going to take a break. I'm going to take 5 minutes, and I'm going to refill my water, and I'm going to pet my dog, and I'm not going to look at these damn screens for 5 minutes. And when I come back, we're We're going to click on every picture that you guys have posted. We're going to talk about momentum, a clear path, and an entry area. And guys, if you're posting in my room and you're not annotating your charts, you're doing it wrong. Respectfully. This is not your grandmother's refrigerator, right? Everything you draw, I'm not just going to post it up here. This is an educational room. So I need you to talk about momentum, clear path, and an entry area. Because if I have to guess on your chart, I'm going to guess with my chart read and then we're going to move on, right? So help me help you. Help me give you the best possible feedback. And if you don't need feedback, it's okay not to post. But if you are taking very confident trades and you want to share with the room, make sure that you make it a lesson. Do that for me, please. I don't ask for a lot, but I want you guys to do that. Holy crap! He said with an excited voice, termination conditions work. Sorry. I had to hit an inhaler this morning. My allergies were going nuts, and it's like speed. I am tingling. I should ask, Joel, because not everybody knows how to do it yet. We're all learning, right? We're all learning how to do this. Let's learn together. Let's make it as low maintenance as possible. So, guys, I will be back in 5. When I come back, we're going to do some chart reading together. This is my favorite part. Your questions are my favorite part. Do not hold back. And then at the end of class today, guys, we will go through market replay, how to set it up. So if you need that lesson, make sure that you're here at the end of class. I'll see you in 5 minutes. And let me encourage you real quick, don't be the trade police. When you see people taking trades that are not high probability trend trades, don't be the trade police. Don't try to point out that they're breaking rules and doing it wrong. You can ask if they've broken rules, but remember that everybody's at a different point, guys. And one of the worst things you can do is try to trade somebody. Right here, Hong? Let's take a look. Will you annotate with me? So the first question that I ask, do I have strong triggers? What do you think? Absolutely we do. Do I have a clear path? And this is a great lesson on how it has to be sequential. Not yet. So Hong, is this a good trade now? Not yet. And it really is that simple, Hong. Because if you choose to trade into this area, you lose. And if you work on that potential to break, you may have lost. So what we're going to do is we're at least going to let those small triggers smash through the area. Let's get the potential to break. At least. Does that make sense? So this is part of that 90%. We're going to sit on our hands and we'll see if this at least gives us the potential. So what you just did there is brilliant. It means that, no, it's not even a 50-50. See how the small triggers, it takes both lines of the small triggers to get through. We are literally into a termination condition right now. Small triggers have to smash through the area, both lines of the small triggers, which means they need to be somewhere up here for us to consider it 50-50. They don't have to. They could, but they don't have to, Hong. That's what you have to realize. And let me show you this. Check it out. They were super strong here and couldn't break the area. They were super strong here and couldn't break the area. Super strong here, couldn't break the area. Let's find one where it goes directly into a fib. Super strong, right into the fib. It didn't break. Very strong, right into the fib. It didn't break. Outstandingly strong, directly into the divergence low. It didn't break. Odds favorable, didn't break. Kind of cool, right? We know exactly where the market may bounce. And regardless of momentum, you're going to learn to respect these areas. Using the word should, could, might. They haven't. Now I have the potential to break. Potential. And now we're going to see what happens. So it's a great read. And sometimes you're going to look at it and say, oh, here comes a trade. But you have to say, there may be a trade, but first I need some rules, right? So potential to break, and we're kind of big split triggers. We'll come back to it, and we'll see what it did after the fact. I can tell you that this strong bottom increases the likelihood of it working, but it doesn't guarantee the win. It is still nothing more than the potential to break. It is not a broken market. But that's why we go back to advantages every time. All right, Cheetah posted yesterday afternoon. Let's take a look at it. So Cheetah says, I have odds favorable momentum and a clear path, and I'm going to enter right here at this area just on the wrong side and leave an enormous amount of risk. Enormous amount of risk on a 12 lot. And guys, this is why I say once we get to the wrong side of the triggers, we don't know what's going to happen. We don't know if it's going to bounce there. Maybe the large chart wants to come all the way back to the mid-band. Once you're on the wrong side of the triggers, it's difficult to know what's going to happen. And if your initial stop is supposed to go 4 ticks below the triggers, leaving $3,000 worth of risk may not serve you well in the long run. All right, Paul, 50-50. Smalls are through, large are not. Do not have a clear path, but we do have momentum. So Paul says with no divergence and split triggers, he'll wait for that up bar. He'll say, you know what? It's likely to go up. It has the potential to go up. Let me force it to go up. And then Paul, did that lesson on using a buy stop help out this morning? Hong, there's no such thing as a good trade or a bad trade. There's either your trade rules met or not. That was Cheetah's trade. And Cheetah said, with this look on the large chart, I'm willing to give it a shot. That's all. But because it's an education room, I have to point out that as soon as the areas get on the wrong side of the trade, on the wrong side of the triggers, you lose the advantage that rule number 3 provides. Does that make sense? And as you grow with the software, Hung, with this look on the large chart, you might be willing to take that risk. And you have to determine how much risk you're willing to put. This is where I say maybe a reversal bar, establish your risk. And Ed, you're right. That is a metric crap ton of risk when your areas are on the wrong side of the triggers. So Hong, everything that I do in this classroom will go back to those very basics, and then you will grow. So here's one of those 50-50s. The lots are, it doesn't matter, Ed. It doesn't matter if it's a 1 lot or a 100 lot, right? The market doesn't know. It feels like a lot of risk to you on a 12 lot because that's, $4,000 worth of money. Cheetah may have 70 million in the bank. That might be virtually nothing to him. So it has nothing to do with the money, guys. It has everything to do with the placement. Paul gave us a great lesson here. Price might come back to these triggers and bounce. Price might come back to these triggers. So he insisted on the reversal bar in order to go with the momentum and the potential to break. And it worked out beautifully for him. He paid a little bit for confirmation, but he was still able to make money. Paul, it's a great trade. And this is good use of the reversal bar to enter a trade. So Hong, that same idea on Cheetah's trade, a lot of times when they're right behind it, but the large chart is perfect, people will say, you know what? I'll wait for that up bar to get me in, just in case these areas on the wrong side of the triggers don't hold. Does that make sense? So it's not a bad trade, but rule number 3 is not met. So you're taking a little more risk. And how do you define risk if you're already on the wrong side of the triggers? That's where those very basic lessons begin to pay dividends in your management plan. Understanding and creating expectations based on patterns. Good stuff. All right, coming up to the next one. Dun, 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 dun. And then Paul, odds favorable, clear path, huge gap, so you wait for confirmation. And now we know how to do that sell stop, right? But you didn't wait for confirmation. You let it start going in the direction. Confirmation would be down here at the bottom and still an opportunity to make money. Great trading. All right, Hong. Yay, we get to look at your charts now. You're stretching them out. So let's start with your large chart. And this is really cool. The trend isn't strong, but the triggers are. The momentum is certainly there, and this represents the first trouble spot. So on your small chart, 1, 2, oh my goodness, 3 divergences in the same price range. And you say that you're going to enter here with the strong triggers. You're going to let it get above the problem and just jump in, Hong, rather than using rule number 3, and that's okay. I'm actually a big fan of this trade. Large chart said strong and up. Small chart says strong and up. And Hong, you were brilliant. You said, let me get past trouble and enter the market. And one of the things that I would encourage you guys to avoid is trying to let the small triggers getting close. Don't let that influence. This just doesn't work out. If you're just going to jump in That is 1, 2, 3 divergences in the same price range. 1, 2, 3. These arrows are not. There's no divergence. Remember, Hong? Divergence means that this blue line prints and pushes over. That's divergence. Same thing up here. These are divergence. These are just pivots, down and up, down and up, down and up. Only one of them had divergence. Does that make sense? And Hong, you're going to learn new details every day, I promise. You are so stuck with me. In a year from now, you're going to be like, oh my gosh. Remember when I couldn't identify divergence? And then you'll be like, hey Mark, here's another $10,000 winner. So if you're going to just jump in, if you're not going to wait for a pullback, there is nothing more than momentum carrying this trade. Does that make sense, everybody? Because I see a lot of you guys jumping in. If you're going to rely 100% on momentum, let me get my S&P. No, it sure doesn't. Jay, did you roll your contracts? So, okay, you said the pullback is on the large chart. Where was the pullback on the... Well, actually, let's do this first, Hong. Let's go back to basics. Let me find my picture. Because I think this is important to remember, especially as you get excited about trades. The large chart will define the direction through the background color. The large chart will define the momentum and the termination conditions. Hong, once you have this, it's all small chart. There's no pullbacks on the large chart. That chart is so slow, you'll never see it. And are you talking about this little tail right here? Cool. So let's go see what that looked like on the small chart. That was that little tail on the small chart. It pulled right back to support right at the top of the triggers. Not the best looking entry ever. But if you took this entry, it worked out nice. Here's another pullback right to support, but it's in between the triggers. Again, it's not a high probability entry. The momentum is there. Right where your arrow is, though, is you clearing trouble and jumping in. Make $100 and then get out. It is, Jay. And this is that one that Ron loves. It's just a momentum. It's just a jump in, get paid real quick, get the hell out trade. But your large chart read, Hong, is beautiful. That momentum just sets it up. So Jay, go to Jason, brother. Just go to Jason, let him fix it. He'll have you fixed in 2 minutes. We could sit in the room and guess all day long and say it's effed up, but Jason will have you fixed in virtually no time. Always take advantage of Jason, guys. He is the best in the business. There is nothing that's broken that he can't fix. The only way he can't fix is if it isn't broken. So Hong, does that make sense on yours? We didn't really get a high probability trend trade entry, but your recognition of momentum and everything is outstanding. And then this was the second reason that we got that little lesson on split triggers today. So here's that tail. So you've got wide triggers. We are into those one-to-ones, which is a potential termination condition. Look how price pulls back and see how the areas are on the wrong side of the triggers, Hong? This was kind of that lesson. It's very much like Cheetah's trade, right? It kind of blows up past it a little bit. This is where when the large chart says down, when the large chart is strong, when everything says the market's likely to continue, that's where that reversal bar pays dividends. You wait for it to start going down. You put your stop right above it, and sure enough, it rolls. It just heads down. And then that 50-50 look, Hong, is on the large chart. Let the large chart define the areas. Let the large chart define the momentum. Let's use the language on the small chart only for entries. Yeah, I'll be happy to, Cheetah. And even though it was a little green here, that one said down with aggression. So a little confirmation goes a long way. Does that make sense? When the large chart says down strong path, let's just find an entry on the small chart. 50-50 is not a small chart thing. And if this would have pulled back to the mid-band, would have been a beautiful trade. And I think down here we had that termination condition, and that's why these trades just didn't work out. Great reading, great chart reading. And then Cheetah, odds favorable and a clear path. And guys, this is why I'm such a language nerd. So this is rule number one, and everybody loves to write out rule number one. And this is rule number two, and everybody loves to write out rule number two because it doesn't take a lot. Cheetah, rule number three says you're going to buy a pullback at an area, and that's not the end of it, brother. Inside of triggers. Why are we buying an area inside of triggers? Because my initial stop is going to go 4 to 5 ticks below those triggers. And why on earth would I take an entry where I'm willing to get stopped out? Does that make sense, Cheetah? So what I was saying is that on a trade like this, when there are no areas inside of triggers, rather than hoping, and I don't know what happened with this trade, why not force it to give you a reversal bar? And then you know exactly where your stop goes, 2 ticks behind it. And you're not on the wrong side of triggers anymore. And then Hong gave us a beautiful example of that as well. I don't know if the mid-band's going to hold it. So I insist on confirmation. And Cheetah, how did that one turn out? Did it work? I mean, the large chart look is perfect. And sometimes we'll get lucky. No worries. Manage your trade. Good stuff, guys. So Hong, the best advice out of those 2 pictures that I can offer you is remember which chart does what. Commit that to memory. Large chart leads the way, defines direction, momentum, and areas. Small chart's going to be used for entries. That's going to be your refinement process. Great job. All right, I'm going to just get a couple of them going here. You guys hear my mouse spinning? I've got to really run from top to bottom to get you. Strong top, odds favorable, potential to break. Perfect chart read on the large chart. Small chart has split triggers. So if you're going to take this one, maybe sell the reversal bar. Absolutely beautiful. That's a lot of indecision on the potential to break. Let's look for the reversal bar, that confirmation. I love it. This keeps playing over again and again, guys. Insisting on confirmation when it isn't perfect, which means that you've got to know whether or not it's perfect. That's where learning your rules. Not quite a strong trending market, not quite odds favorable momentum, not really momentum, definitely not an area inside of triggers, and shoot, it didn't work. How much can you give away and still expect it to work, Andy? Were you trying to take a momentum trade without momentum? It's a pretty common theme. I'm taking a jump-in trade. Guys, jump-in trades require momentum on both charts. This is not momentum on either chart. The only thing you had going for you was a clear path. 66% of your advantage is gone. And congratulations, you got out with a small loss. Not even a little bit surprised. That's okay. But by me saying it, Andy, I'm not beating you up, brother. What I'm doing is I'm giving you this annoying as hell voice in the back of your head. So when you go to try this later, you're like, oh shit, I can't take a momentum trade without momentum. Maybe I need to wait for a pullback, and since no areas are inside of triggers, maybe I should wait for a confirmation bar. Maybe my money is worth giving myself the best opportunity. Guys, I am a broken record, naggy as I can be. I know that I am. Morgan, you just want to get him in the room? Shouldn't be a problem. Have him get into the Discord channel. We may need to get him access. Who are you working with? Mark Dean, is that your guy? Whoever your sales advisor is, tell them, hey, I got a referral for you. And they will make sure that they get in this room. All right, Jen, bad bottom, odds favorable, potential to break, no divergence, clearly defined entry, and then you chickened out. Why did you get out so quickly? Everything was going up. This is that first trade of the day, emotional trade. That, oh man, I sure hope it works, but it doesn't feel right. Let me go with my gut instead of my rules. Because from 32.8, what is this? This is gold? From 32.8 to 33.8 is $100. And then you just go break even, right? So have your plans, guys. Know why you're going to do what you do. Oh, range chart trouble spot. So Jen, you said I'm tired of being consistent with only 2 charts. Let me give myself some stuff to scare the hell out of me. It kept you from getting paid. And I don't know what happened in gold after that. Adding charts, guys, it's not always the best. Not always the best. 50-50. No divergence, perfect entry, small loss. Beautiful. Everything about this market said it has the potential to break. It didn't. Isn't that crazy? Guys, I took the same look this morning. I'll share mine because it's very relative to what she did here. Oh, it's okay. I was asking why you added a 3rd chart. What about all of your consistency and profitability made you feel like you needed another chart? Just curious. What part of doing everything right and getting paid daily made you feel like you should add some stuff to the mix? You don't have to answer it. You can answer it for yourself, right? And I don't know what your profit targets are normally, but $100 is a good one on a 50-50. And I don't know, you got super tight on it here. So I don't understand, and it's okay. Range chart had a trouble spot. Large chart had a potential to break. It was the 3rd chart that threw you, right? What did it do? Did it end up going up? And it may not have. It did go up. Oh my gosh. Have you guys seen this movie? Hit the fib on the large. Really, Jen? Run a lap. No beer for you this weekend. Too Many Mind. Have you guys seen The Last Samurai? I love this movie. Especially this part in the movie. Because, guys, this is day trading. Mind the sword. Mind the people watching. You guys remember Tom Cruise is getting the crap kicked out of him by the samurai? And this kid runs up to him and he goes, dude, stop overthinking. Keep it simple. No mind. Just follow your rules. Keep it simple. Too Many Mind. Jen, you had too many mind. And it cost you. It is. I'm telling you. I love the range charts, guys. Don't get me wrong. I think they're wonderful. But if you're doing well, I don't know why you guys always change it. And then, Jen, I love your 50-50 here. It's perfect. It is the perfect 50-50 that didn't work. And that's why I wanted to share this one, guys. I had a strong top. I had odds favorable momentum. I had no divergence. I had areas inside of the triggers. Everything was met 100% by the KISS plan, guys. I did my part. I followed my plan. And, oh, where was my second picture? Dang it. I got stopped out. I lost. I don't care. They can't all be winners. And then I added this one too. So this is for you guys when there's a lot of consolidation. I saw Morgan and Pete talking about it. Guys, when you get these areas of consolidation, the 50-50 that happens after is either going to run forever or it's going to fail miserably and fail fast. Because here, they can't get outside of the areas. And let's go to the S&P and you'll see it. Super consolidation. They tried to break out and the buyers stopped them. They tried to break out and the sellers stopped them. They tried to break out and the buyers stopped them. The sellers stopped them right at Fibonacci. That's a big indication. And then they pushed down exactly to where the sellers wanted to go. Guys, these 50-50s are either awesome or they're instant death. Follow your rules. That was a 50-50 that failed. Right back to Fibonacci support. Now it's some weak honking triggers right at Fibonacci support. 90% of your day is doing absolutely nothing. 90% of your day is wishing that damn market would give you a trade. 10% of your day is taking the correct trade so that you can capitalize on those advantages that the market gives. Can't stress that enough. Every move is not your move. Every dollar is not your dollar. It can't be. This is the picture that I wanted to put. Every trade will not be a winner. This medium probability trade didn't win. Learn that phrase, next. I will take the next advantage because I believe in my methodology. Jonathan takes a 50-50, just jumps in at the top, out break even. Once again, just jumps in, gets out at trouble. And then Jonathan says this market has been absolutely trending strong up all day. I'm going to buy that mid-band and hope that it works. And he does. He waits for it to go up, which I love. He doesn't try to catch it on the way down. He catches it on the way up. And he gets out right at trouble. Jonathan, awesome trading. Jump in trade for a quick win. Trend trade in a strong trending market. Fighting the termination, but waiting for confirmation. And guys, when you have a strong trending market, when it is one way, let me get rid of some of these so I don't tax my computer too much. When it is a one-day event, some people will just keep buying the mid-band until it doesn't work. It's a great way to take advantage of a strong trending market. Good stuff, Jonathan. And then Pete, did you get the answer on this one? So guys, if you see the, this is for everybody. I'll share it with everybody then. If you see a fib stop printing back here, that fib's out of the game. It's done. That's it. Rear view mirror. All of your synthetic fibs, your one-to-ones, even your mid-band, will not show up underneath the most current bar. So one-to-ones, mid-bands, and synthetic fibs will not print until the bar prints. So this is not a clear path right here. This fib is still in play. This fib is in the rearview mirror. This divergence is very much in play. So that's kind of a good little lesson there. I like it. And that's one of those that didn't work, one of those 50-50s that didn't work after consolidation. Great question, Pete. Do you know it took me almost 3 years to learn that lesson on the synthetics not printing? Always learning. Always, always learning. Life's better like that. Let's see where we are in pictures. Dun, 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 dun. Jonathan, Pete, scrolling down. We had a little break in the action there. Cutest puppies ever. You want to be a day trader? Nah, I want to be a chart reader. Sorry. I am a 4-year-old. Jeffrey Dean. Let's see what you did. Weak top, but came down with a strong bottom at the cyan line. Set a limit at 70.63. All right, Jeffrey Dean. What direction is the trend? What color's the background? It's red, right? Do you have momentum to the upside? Do you have a clear path to the upside? Look at it now. Do you have a clear path to the upside? Why would you omit such an important factor? That's why you bought this software, these key areas. So Jeffrey, this is where I say, if you are against the trend without momentum and into a termination condition, hell, even your small chart has everything down. The market's going to give you this one every now and then. The market's going to let you win this one, and you're going to feel like it's a good idea. But do you see how you gave up everything? Every advantage that you could ever hope for is out the window on this one, and you're just hoping to hell that thing goes up. And I hope it went up for you. But guys, this isn't a recipe for long-term success. Getting lucky, especially on sim, with zero advantages in the trade, gosh, I'd rather see you go short from here, at least with the direction and the triggers and all that good stuff. But one of the things to think about, and I don't know what happened after the trade, this is one of the reasons why I like to see the aftermath too. Maybe it won, right? Maybe it did win. And maybe if it did win, Jeffrey, we could find you a more conservative, easy to manage entry that might force you to be patient for a minute, but has more advantages in place. Does that make sense? So you did get $200. Hong, you tell me. Do I have momentum? Do I have a clear path? 50-50. Do I have an area inside of triggers? This is a medium probability trade, Hong. Great recognition. These triggers didn't smash through, which I don't care for. But if I get a pullback to an area inside of favorable large triggers, I might take a shot at it. And then my stop, I already know where my risk is. Are you okay with $100 risk to see if this area breaks? All right. So this is Hong's trade. Hong, if divergence prints on my small chart, when you go to the KISS plan, divergence is the #1 killer. The #1 killer of 50-50 trades. If this divergence is true, do you want me to cancel your order? If you right-click above price, you can put sell. Now I have divergence on a 50-50 trade. Do you want to keep your trade in play? Even though the rules are broken? Even though the KISS plan says no? And Gil, with the small triggers through, it has a chance to break because of the momentum. This divergence tells me it's not a good look. But I'm willing to break a rule. My KISS plan says cancel that order. Don't take this trade. You want me to cancel? Let's play it out. It'll be fun. I mean, what's the worst that happens, right? It's simulator. Let's make some mistakes if we need to. Let's go into it with the understanding that we broke a rule. This isn't the best of the best. And look, it may not even come get us. But I'm okay with this. What you have to do, though, is not just take the trade. You have to be able to look at your chart, and you have to be able to say, I have momentum. Say it out loud. Scare the dog. You have to say, this area has the potential to break. It's not a clear path, so it's not high probability trend trade. I may need to manage a little aggressively. And then you have to say, divergence printed may kill this trade. Rules not met for entry. I choose to take it anyway. I'm breaking my rules, but I choose to take it anyway. And look, it didn't come get us. And now if I get a second divergence, that's even worse. So, Hong, great read. Perfect read. And once you know your rules, you'll know whether or not you're willing to take this trade. Once you understand the basics of your plan, you'll never have to ask if it's a good trade, and you'll always be able to say, my rules are met or my rules are not met. I hope that makes sense, everybody. It means that it never made it to our entry. They didn't come get us. We were waiting for them right here. We were on the corner of 5th and Jones or whatever, and it only made it to 3rd. They just didn't come get us. Does that make sense? Nope, you never got your trade. You never got your entry. And now we start over. I still have the potential to break. I still have an area inside. But now I've already got one divergence. So we'll see what happens. Unfortunately, every move is not our move. Every entry is not our entry. Every tick is not our tick. In the very beginning, the best thing you can do for yourself is have a plan and commit to that plan. All right, Pete. Directly into a termination condition. You added on directly into a termination condition. You said F that termination condition. And your stop is where the market shouldn't go. Triggers didn't smash. Momentum style trade. Momentum ended right here. Split triggers, if you waited for confirmation, you could have put a stop right here, taken a small loss, maybe a little victory. But now we've got weak triggers, split triggers, potential, no potential to break at this point. Everything's turning. Just didn't work out. Took a winner and turned it into a loser. That happens sometimes. And guys, when it consolidates, the 50-50s aren't always... If it doesn't win quick, it's probably not going to win on the 50-50. Odds favorable, potential to break. 1, 2, 3, 4 divergences. Jen said, I'm not taking this trade. And Jen, you could have taken this one maybe, but probably managed out. And you're just looking at the fight. Great job sticking to your rules. Sorry guys, there's a lot of posts. I'm not down at the bottom. I can't see your questions yet. Too many highways coming together, just waiting for a clearer path to make a decision. So, Jeffrey, I love this post. Girls don't like bar fights? You don't know the girls I hung out with in high school. Someone can make gazillions by making a voodoo doll for they traders. So Hong, you're asking what's wrong with doing it if it didn't lose? All right, Hong, that's a great question. I'm going to answer it through interpretive dance in a series of rhythmic drummings. Not really. All right, Hong, if I flip a coin 10 times, and heads wins 8 times, always, guaranteed. And tails only wins 2. And this is, you did this flip, and heads, it's loaded. It's a loaded coin, Hong. If heads wins 8 and tails only wins 2, would you ever bet on tails? If you know going into it that every 10 coin tosses, you've proven that quarter lands on heads 10 times. Maybe you took 100, right? So Hong, if it lands on tails that one time, right? If you decide to bet on tails and it actually happens, are you going to change your plan because of that one low probability it just happened to win moment? Or are you going to commit to the best of the best? And that's exactly what day trading is. So you are not trading results. And this is where people get cloudy. Guys, whether it wins or loses is irrelevant. You are trading a pattern, a process that when repeated over a sample, 20 to 100, whatever, trades, this pattern has been proven to win more than it loses. So I don't care about the result. I focus on the execution of the method. And this is some Mark Douglas wisdom, guys. So Hong, losers win. Poor trades, rules broken trades will win. And you will get lucky. But trading isn't about that one trade that even though I traded into a termination condition, I made $200. Even though I didn't have momentum or an entry, I made $150. What you're doing is you're trading the pattern that has been proven to win more than it loses, and you're 100% committed to that, which means, let's go back to it, that we're not just going to jump in and hope, right? We're not going to forfeit our advantages hoping for a winner, but rather we're going to wait for the best of the best, because let's be honest, our money's worth it, isn't it? Your investment is worth it. Your kid's college fund is worth it. If you were going to buy a house, would you buy a house with very clear termite damage all over it if that's the house you wanted to live in? No, of course not. You would say my plan is to have a house where it's not being eaten by termites, because that's my best chance of having a nice house forever. My job is to buy a house without foundational problems. I don't want to hope that they never become a problem. I want to go into it feeling solid about it. So now we still have the potential to break. And now I've got 2 divergences printing. It's less likely to work. It doesn't mean that it won't go down, but it's less likely to work. Does that make sense, Hong? Sorry, I went on a little tangent there. A short trade might have worked here, but there's no advantages, right? And trading in all those termination conditions without momentum. Jeffrey got paid $200 on that one, right? But what if he held on and said, I'm such a badass that I called this breakout of termination conditions. I think it's going to go to 71. And then right here at 70.70, he loses $7,000. Because he didn't read the indicators. He didn't do what the indicators said. He did what his gut told him to do. Guys, my gut is functionally retarded. It never puts me in good positions. But my rules don't let me down. So Jeffrey, I love this picture. I love this picture that says, you know what? I can't find an advantage. Let me sit on my hands. Brilliant. Andy Man, everything says down. There was a fib there, right? You get paid. 2 divergences on a 50-50. You take your exit. Nicely done, Andy. All right, Arnie. Whoo! New people love to test my eyes. So just a little heads up for you guys. When you post in the room, it's okay. I don't need all of this. Just for grins. So when you click and drag, it's okay to go about like that, right? Kind of show me where you're coming from and all that. But when you give me these huge pictures, I go, psh, psh, psh. Okay. So if you're trading a double screen, Arnie, start halfway through, right behind your large chart that's pertinent, and drag it over to the other screen. It'll work. Pretty cool, right? Thanks, man. And it's not a big deal. And if you do this for the rest of your life, I still love you. But it's just one of those things. It's easier to read. So I love this. Man, nice bottom. Thank you for noticing. Termination that reverses the market. Absolutely awesome. Odds favorable momentum. Beautiful. But a 50-50 look, right? Arnie, you know this isn't a broken area. This is the potential to break. And then when I come to the small chart, to the entry chart, no divergence. I love it. Areas inside of triggers. I love it. Stop where the market shouldn't go. I love it. Arnie, you did everything right on the potential to break. It didn't work. It was the perfect 50-50 trade. It didn't work. It's okay, man. I would take that trade all day long. Wouldn't even hesitate. And I probably would have taken the same entry and my stop would have been right there in the same spot. I love this trade, Arnie. Perfect large chart read. Perfect entry. Stop makes sense. Assholes just came and got you. We can't control that part, guys. All we can control is whether or not the rules are met. And Arnie, you did it flawlessly on that trade. Nicely done. Hey guys, that's another reason that posting in the room is kind of nice. Because when you take a loser and I read your indicators with you and we talk about the rules for the trade and I just say, oh man, this is the cost of doing business. They can't all win. Sometimes that feels pretty good. Ron, the heartburn trade, not a trend trade, guys. Fights trend, fights momentum. He gets 2 divergences right after it hits the fib. So the termination condition's a big part of that. 2 divergences, he gets in and he gets out quick, guys. He recognizes that a combination of terminations and divergences are not a recipe for more down, and he's found a way to go up with it. I hate that trade. It gives me anxiety. But I love everything about that trade because I know that he has studied it extensively, that he has practiced it, that he has determined that he can win more than he loses, and that's how it made it into his trading plan. I do not encourage new users to take trades like that. And then once again, 50-50, no divergence. Man, they got you twice, Arnie. They are doing you wrong, my friend. Is this gold? It is gold. I hate gold, personally. Guys, and don't let me influence you. I refuse to trade gold. I think gold overruns areas a lot, even on nice trades. But again, Arnie, the only difference between this 50-50 and the previous 50-50 is this 50-50 is not coming from a strong bottom. This 50-50 is coming from a pivot kind of in the middle of nowhere. The same one as this that continued down, the same one as this, not a strong bottom, that continued down. So what we're looking at, brother, is a down back to the mid band. More down, back to the mid band. More down, not at a key area, back to the mid band, right at that fib, 50-50, and potentially more down to reach that fib that they didn't hit. They know where this fib is. But again, it was the perfect look, man. And it sucks when you take the perfect look twice and it doesn't win, but there's going to be days where that happens. I don't think following rules is your challenge. I just think they're being jerks to you. All right, let's see what Nexgen Ben did. Everything pulls back to resistance. Yeah, Ron, this is your stuff, man. Termination condition. No triggers through. Divergence off the termination condition. Ben says, I can take this entry. This area has more potential to hold with divergence. And he holds it all the way down to trouble. Because when they don't make the fib, they love to make the fib. Ben, what a great trade. Guys, this is just experience. That's all it is. And if you don't get in here, maybe you like this one. Maybe you like this one. You'll be floored at how many opportunities you see in the market. And then this is the exact same look going the other way. Ben, this one's too small for me. But it's the termination. And it goes right up to resistance. Oh, that's the same trade. Understanding the range, knowing where your stop should be, and trusting the market to get to your target. I love it. Most of us aren't there yet. Most of us don't have the 9 years that Ben has. And that's okay. You'll get there. Yeah, it's weird, Arnie. That's the one thing about gold, is it's temperamental, is what I found. All right, this was Jay. So Jay, talk to me about what you're doing, brother. I have no idea what the large chart's doing. Are you comfortable taking pictures of both charts? You want to do a quick lesson on it? And it looks like you're just taking those momentum trades, right? You're just trying to capitalize on that big push, that fast push, not so much trend trades. And your charts look wrong, and I know that you fixed them. It's okay. So this one's kind of hard to read. I love this. You wait for it to clear, and then you head down. No reason to get stopped out. You got it, Shadow Picks. Without the large chart, it's hard to tell, but every time you were left of the triggers, it kept going up. And every time you were left of the triggers, it kept going down. There's probably a great lesson there. All right, Shadow Picks. Oh, look, it did end up breaking. Happens sometimes. So Shadow Picks, do you have... Here, watch this. So if you go to search and type in tech, you have TechSmith Capture on your computer. Click on it. Cool. And bring it up. And then once it's up, it looks like this. It's just a big red button that says Capture. So when I click on that button, if I hover over just one chart, it's only going to give me one chart's worth of information. If I hover over the large, it's a large, the small, the small. So what I need you guys to do is left click on your large chart up in the upper left hand corner and drag that bad boy all the way down to the bottom right. Make sure you get both of those charts in there. And then once you release the mouse or the Kraken, it's going to let you capture an image. So I capture the image, and I have what's called the Capture Image Preview. So for example, this is the one that we were looking at, right? That potential to break, all the momentum coming down, stuff like that. There's these different tools that we can use here. If you pick your favorite color, whatever makes you happy. But each of these tools, arrow, call out, and shape, these are all click and drag. So if I left kick and drag, I get a little arrow, or I can do a huge arrow. So maybe I point at my momentum. And then I'll take another arrow and I'll point at whether or not my path is clear. And then maybe I take one more arrow and I point exactly to where I get in. And then I can use the shape as well. Maybe this was my entry. And then the call out box is the most important thing that you can use in this classroom. Left click, create a box, and you might just say, I had momentum Hey, Mark. I'm not sure on the path, but I think it's 50-50. Help, right? And then over here, you might say, and guys, it's okay if you took the trade. You might say, I went short at an area inside of triggers. And then you might say right here, this scared the crap out of me, so I jumped ship. No worries. And what you've just done is you've talked about the momentum. You've asked for help on identifying the path. You told me why you think this is the best entry. And then why you exited, because there's great management lessons there as well. You've got two monitors separate from your laptop. So, so you're watching this on your laptop, but you've got your trading computer? Is that right? Or you just have your screen set up on two different monitors from the same computer? And if you need to do that, and I don't know why your large and small would be on separate computers. Are the monitors hooked up to the laptop? I guess that's what I'm asking. Okay, cool, then no worries. I worked like that forever. So shadow picks, I'm going to close that out. Click capture, and let's say that my large chart is here on this monitor. This is my 32-inch monitor. It's right in front of me. This is my center monitor. But my small chart is on the monitor off to its right. I'll just click and drag between the two monitors. And then when I release, I get both. So it's no problem at all to have them on different monitors. You can click and drag between the two. If you want to give it a try, give it a try. Anything can happen triggers, and the market's retracing higher. Kind of cool, right? Sure glad I have that momentum lesson. Does that make sense, Shadow Pick? So just click and drag from one to the other, because I used to do that too. I used to have like a range chart off to the side, so I would have to take pictures from two monitors to be able to do it. Good stuff. And then one more time, because I do like to not just teach you guys to fish, I like to give you fish. In regards to taking pictures, in regards to posting in the room, to being able to put them where you need them, right here in the software guide. Let me give it to you. And guys, this is stuff to practice over the weekend. Practice taking pictures of charts. Practice posting them in the room, and just post them in the room like this, and just put test under it. So I know that when I come to this room on Saturday afternoon, I don't have to go into full education mode. It's just you posting in the room. Let me see where we're at. All right, Miss Cindy. Oh, you got a couple of them. You've been busy. Termination. I like it. Everything says down. It sure does. 50-50. But Cindy, you're directly into a termination condition here. Do you see it? You're at a blue line at a divergence low, and not one trigger has made it through there. And sure enough, it creates a big ugly bounce that takes you out right at the synthetics. So it's not even the gap theory. The large triggers aren't a full bar away. Of course it was a loss. But what's the one thing that you didn't mention? You didn't mention your path, Cindy. You didn't say to yourself, holy crap, look at that blue line and the divergence line, and all my triggers are sky high above it. And it got you, as it will, directly into a termination condition. Does that make sense? Your triggers were split, and it went right up to the top trigger. Just like we said it could. Every morning I say that. It could go here. It could go here. And if you jump in here, You got to be ready for it to go here. You have to determine whether or not that risk is okay. And Cindy, if that risk is not okay, wait for the confirmation bar. Because this was your first bar down. Pretty cool, right? What an awesome safeguard. And sure enough, the market went down once it closed the gap to the triggers and once you got a reversal bar. This is the I hope it goes. You don't have odds favorable. You're directly into support here. And you had a white bar off of support. That's a rough look. Do you see how there's a lot wrong with this one? Or a lot of advantages gone. I won't say wrong because that may be your trade. And then once it has the potential to break, you jump in again. And once again, it goes to those large triggers. Better stop placement this time. And it goes down for you. Strong top, odds favorable. You take a chance once again into a termination condition. One worked, one didn't. Right? So you're 50-50 on traded into termination conditions. Maybe a good lesson there. And then with a clear path, it's just freaking easy. Without all those lines creating a bounce, Cindy, it's damn near effortless to get paid, isn't it? So I think, hypothetically, call me crazy, that you don't have to work that hard to get paid. But sometimes you have to be a little patient, right? And the potential to break is much easier than hoping the area breaks. And it's okay, guys. I am, or was, I'm not anymore. I think I finally fixed it. I was notorious for trading in determination conditions. I traded into every line I could find. Hell, I didn't even wait for rules to be met. I saw a line and I traded into it. And my brother asked me one day, he goes, Mark, how many times are you going to break your rules and lose before you start following your rules? And I was like, I don't know. I got at least another 1,000 in me, probably. Everything says down. The momentum is strong. He clears trouble. In and out. Momentum. And for my Hongs and my Veronicas, and you guys that are looking for that next trade, once you understand momentum, and once you can identify getting past trouble, this is an awesome one. But it takes some practice. You have to know some basics to be able to capitalize on this one. That is the chili dog. I love the chili dog. And the cool thing is it works both ways. Strong triggers, clear the path. Strong football player triggers, another base hit. And notice that he doesn't hold and hope. The only thing that he's relying on is momentum, and he says momentum changes all day long. Momentum dies out all day long. Momentum rarely lasts. So he jumps in, jumps out. $100 a pop, guys. It's beautiful. Beautiful. Shadow, I'll get you in 1 second on that one. And then Cheetah, odds favorable, strong bottom, but not a clear path. And you say, you know what, even though the path isn't clear, do you see how you're above the fibs, Cheetah? This is problematic, but you're above all the trouble except that one line. And if you enter right at the area at the triggers, you know where your risk is. And you're able to capitalize on momentum. Not a high probability, but really well done. Momentum helps. Cleared trouble, had room to the next trouble. Boom, boom. Made it. Cindy, have a great weekend. Ron's just putting on a clinic with the chili dog right now. Miss Jen says if Ron can do it, you better believe I can. Everything says down, waits for the back of the bar to clear, gets in with a clear path, gets out with money in the bank. Jen, beautiful. Ron says, that looks familiar. Weak triggers, divergence. Watch this. I'll do it the other direction. This may not be your trade, new users. But it could be one day. All right, so Cheetah, why is that a strong bottom? This is where we need a lesson, right? Why did you call this a strong bottom? That pivot from the middle of nowhere. What makes it strong, Cheetah? And I ask, guys, because the recipe for a strong bottom is unwavering. It never changes. It is 100% the same every time. It has to be a termination condition first. If it's not a termination condition first, it can't be a strong top or bottom. But it never reached it, Cheetah. It was almost at the McWindow, ready to order a McRib, and then it realized it didn't have its wallet and turned before it ever got to trouble. So it has to be a termination condition first. And the only way that it can be a termination condition is if price reaches the area. Does that make sense, everybody? We go back to that basic 101 lesson. Price reaches the area, triggers don't break, now it's a termination. Then when it reverses the market, I'll call it a strong top. Price reaches Fibonacci support, now it's a termination. If it reverses the market, it's a strong bottom. If I don't reach anything or the triggers break, I can't ever call it a strong bottom. It's a great lesson there. And the reason that we focus on this is because Cheetah, if they don't quite make it, this mid band is more likely to hold. And one of the things that you don't have on your chart here, okay, you've got the ES, so you're on the MES. Cheetah, what's your area? Is it the fib? Is it the mid band? Hold on. Let me make this bigger. Make sure my old eyes aren't lying to me. What's your area inside of that trigger? I don't see a fib. I don't see a mid band. I don't even see a yellow 1-to-1. All I see are triggers. Does that make sense? So we're putting a little hope on those triggers to create the bounce. There isn't one. So when I'm looking for a trade, for a trend trade, Cheetah, I need either a fib, I need a mid band, I need a yellow 1-to-1. So when I'm looking for an entry, let me find that picture. I thought I clicked on it. I clicked on the wrong one. Here's your picture. Let me give you the link. So Cheetah, this is true for every trend trade. So for shorts, these are the areas, and then let me see if I have the same for longs. I believe I have it typed out. No. Sorry, I didn't type it out for the long trade. But for the long trade, it's going to be blue Fibonacci, green midband, or yellow 1-to-1s. And these are the areas where trend trades originate. So once you find yourself without areas, there's nothing there to create a bounce. And this was the ES. So this is where we're at right here, right? So I'm directly into that midband, Cheetah, and my large triggers are almost a full bar away. So we'll see if it closes back to the synthetics or if it decides to go up. And of course, my look is a little different than your MES chart. We'll come back and we'll see what that one does. But that's where language is so important, right? Not enter inside of trigger. And then the last one that you wrote, Cheetah, you wrote enter at the area. So let's combine those two. Let's enter at area inside of triggers. And we'll just combine it, and that'll give it, so the triggers are where I expect price to return. And then the areas inside of them are where I expect the bounce. Great picture, dude. Great picture. C-Dub, odds favorable, mostly clear. What the hell does that mean, C-Dub? I only kind of got herpes this weekend. Mostly clear. Trading directly into trouble. Absolutely no room to make money. Trading from trouble. All the room in the world to make money. Right? So what about small triggers up? What about one-to-ones, support, made you feel like that was your trade? With no room to make any money, when we know how often these fibs create a bounce. Was it the potential to break, the pull back to areas in the confirmation bar? That's not a base hit. That's a foul ball that some little kid returned to the umpire and got a stick of bubble gum. 3 points is $60. That's it. This, trading from the area, right? Everything says down. The path is clear. Look how freaking easy it is. And you jump ship early instead of holding for the next area. This one is likely to bounce against you, trading into the areas. This one, let that thing mature. Let it run. You got clear pastures, brother. Such a different look. But this goes back to the idea you have to know why you're going to enter the market. And C-Dub, if you wrote a plan that said, this area might break, hell, I don't know, I'll trade into it. Just jump in without the advantage of momentum and hope for the best. Your large chart didn't have a clear path. Dude, I can see your first entry and your large triggers are above the area. I can see your large triggers above the area right here. I can see your small triggers up. I can see 1, 2, 3 areas that can jack up your good time. Does that make sense? So if you wrote a plan that said, it might break, I don't know, I'll just jump in, but I won't even have momentum. I'll just hope that it gives me $60. Or, and let me back this up, what if you wrote a plan that said, I'll let it break with momentum and just jump the fudge in. At least I have momentum and a clear path, and this stuff seems easy, right? So understanding why, and I think this is a great tool for new users, is when you take a losing trade, go back to it. None of you guys study your trades after the fact, it seems. Go back to it and write out what you really see, not what you thought you saw. Does that make sense? Because there's a lot of trades that I've taken in the past where I thought I saw a clear path, but when I went back to the picture, I realized that I didn't. Take the time to re-annotate your chart. Take the time to commit that lesson to memory. You'll be floored at how quickly you get to where you want to be if you put the work in. Work sucks, guys. It's no fun. Everything says up, let's go up. Everything says down, let's go up. Come on, Ron. You don't even have the gap theory here. And this is where I'll say to Ron, you might have gotten lucky on this one. That's a lot of faith in one blue line. Against odds favorable momentum on both charts. Without the benefit of divergence or being on the correct side of the small triggers. Ron, no chili dogs or bikinis for you today, man. I want you to sit in your office and think about what you did. Guys, this is the recipe for financial suicide. Ron has the reps. He's willing to take this shot every now and then. But the simple idea of getting in on the other side of the triggers while you count. But it wasn't quite the gap theory, and it was a strong top. That's what makes this one so dangerous, Ron, and I don't mind pointing that out. And guys, don't ever justify your aggressive trades by the result. Odds favorable. So there's that gap theory, Rob. And why do you have a fib here and not here? What did it end up doing? It worked. Look how far in between. That's the one thing that I would warn you guys about, right? If you're going to get in up here, where does your stop need to go? All the way down here. Let's see, at 50 bucks a point, we have 5 points, 250 per contract. This is one of those times, Rob, split triggers. Let it force you into that trade with a reversal bar. It's good luck, dude. Momentum, into the mid band. You still don't have the reversal bar marker. I don't know if it was the gap theory. Not favorable large triggers. But it is the area inside of triggers. And you put your stop in the right spot. But that's an awful lot of risk. That's where that confirmation bar might help a little bit. That reversal bar up. And if you waited for the reversal bar up, it's almost the exact same entry. And it was nothing but upsville. Does that make sense, guys? When the triggers are split, it's okay to wait for confirmation because we know it may go down here. And once it gets down here, it's not obligated to stop, especially with no areas to create a bounce. Good look, Rob. Just a little fine-tuning. Triggers rolled, odds favorable, clear path. Split triggers. So Pete says, I'll wait for a little confirmation and rides that momentum down to the fib. Pretty awesome. Rob, you put an exorbitant amount of risk on your trades. That's okay. I have never gone broke because of your risk. One, two, three divergences. Probably a lost trend trade right here. 50-50. Pull back to the mid band. You try to take the momentum trade. It doesn't work out. That's okay. When momentum trades fail, they very often become trend trades, Pete. Great chart reading. Great recognition. You know where your stop belongs, but with all of these areas and this momentum, you get in here, you're willing to accept the risk. And that's it, Rob. Are you willing to accept the risk? And then sure enough, all that momentum just launches it. Bing, bang, boom. Great trade. 8 contracts times 46 ticks for 36.80 profit. Boom. The only live trade of the day. Beautiful. You're right, Pete. I did miss your best one. I'm glad you pointed that out. Cheetah, 50-50. Strong bottom. Odds favorable. What's DB? Oh, double bottom. Okay. That makes sense now. It's like pretty obvious once I look at it. And then Cheetah, beautiful usage of the lesson, right? It's not perfect. There's divergence on a 50-50. And you said, hell, let me force it to give me the trade. And it works awesome. Cheetah, I love everything about this. Great job, strong bottom. Great job, odds favorable. Great job, confirmation when it isn't perfect. I mean, holy smokes. Nicely done. And Paul, we've been talking about that confirmation bar all day. So Rob, hold on. Rob, this is for you, brother. I made this morning just for you. And what this is, whoops, I don't know why I just tried to download it from the room. That's silly. Let me make it big real quick. I added some annotations into it. I dropped these in the room too, but let's go through it real quick, and then we're going to do market replay, guys. So in class, as a foundation, you're taught to enter the market at areas inside of favorable large triggers, guys. And there's only one look for favorable large triggers, and this eliminates a lot of guesswork. It's the easiest approach. This is the easiest look, but it's not always the look. The reality is that often your entries are not perfect straight out of the manual. When triggers begin to separate, it creates a wider range where the entry... Yeah, I sure will, Steve. It's all recording. Have to leave at 9. I'm like, dude, it's almost noon. Absolutely, I'll record it. You know that it's in the instructions too. It's off the page, but it will be recorded, and I'll go through it nice and slow and very thorough. So you'll be able to find it in the last 10 minutes of the video. Have a great day, brother. Have a great weekend, man. Guys, it's not always perfect. And understanding the idea that price returns to triggers, it's going to help you stay a little patient. When you know that it may go here or it may go here, this gets that thought process kicking. I don't know which one it's going to go to. So having multiple areas where price may return creates a bit of indecision. When I've got mid bands here, this might be just a little bit too big. When I've got the mid band here, when I've got a fib down here, hell, where's it going to go from? Guys, we never know. We expect price to return to the triggers. We expect areas to create a bounce. This is that indecision. So Rob, I think this is going to help you with risk a lot. This is where the idea of using a reversal bar to confirm the movement in the direction of the trend can help with entries. It doesn't assure a win. But by using the bar, you can establish your risk. If I get the reversal bar, I know exactly where my risk is. When there's a huge gap, what it does is it says, all right, I'm willing to take this one. And here's the deal is, guys, it may still come down to here. You might have to take it twice. But at least you can take a small loser and then get in on the second chance if the large chart says go. So that's what I just dropped in the room there, guys. And that's one of the great things about that confirmation bar once you get out of the way. Ron, have an awesome weekend, brother. Always appreciate you being here. And Cheetah, you did it perfect. So Rob, I hope that makes sense. Morgan, 50-50. Not a clear path. Divergence prints. Pulls back to the area inside of favorable large triggers. Second divergence prints. Pulls back to the area inside of favorable large triggers. And it ends up going. Not a clear path. Weak bottom. Divergences. So Hong, this goes back to, well, if I didn't lose, why didn't I take it? Because more often than not, this look kills the trade rather than create success. Morgan knows it. He chose not to take it. And it went. And this is going to make Morgan question his plan. This is going to make Morgan wonder if he should start breaking his rules. And once he does that, they are absolutely going to school him. Odds favorable, clear path, meh, bottom. Pull back right to support, right at the bottom, and it stops you out. Bummer. But it didn't stop you out of all of them. And this is one of those ones, Arnie, where if I get in here and I get stopped out, I'm freaking back in on the reversal bar. This one, that's that low tick, do you wrong. I am so back in on that reversal bar with this look on the large chart. Sometimes it falters a little bit. So if this one gets me, dude, I am in. You can't keep me out of that trade. All the way up to fibs, right where you got it. Great trade. I don't know that it's better to wait for the bar with your look. Take your entry. That's the highest probability spot for a bounce. It just got you, and then there's your second chance. Sometimes you got to take trades twice, guys. Oh, was it good? Very nice. How come on the ES there's a red fib at 57.65, but on the small chart 57.50? So Hong, let me read your numbers here. 65. We haven't made it to 65 yet. 50, okay, hold on. 54. 56. I'll get you, Veronica. So here it is at 56 on the small chart. There it is on the large chart. Here it is at 51 on the small chart. There it is on the large chart. I am too. Here's 56. This is the fib. Watch. Your software prints the fib over. You know that I can't see what you see, right? On your charts. There's that fib. Kind of cool, right? The only fib that... Well, you're in a different time frame, right, Hong? You're not on Eastern time frame, you're on Pacific? Don't compare your charts to mine. Remember yesterday when we said that you have different midnights? Therefore, your software is gauging different swings? And our fibs may be different as long as we're in a different time frame? Your chart is just right for you. That's okay. This is why I say the same thing over and over, because eventually it sticks. Nothing has ever stuck with me the first time, ever, ever. Ask my wife. So Veronica, take your picture. Are you good taking the picture? Yeah, me too, Andy. No worries. Okay, so once you take the picture, you should have this image preview. Did you get that? And if you can't see it, I don't know why it would be hidden. Okay, so you have this. So right here, copy. And once you copy it, it goes to your clipboard. You can put that directly into the room. Just paste it right in the chat box. If you're in the pop-out, you have to put Control-V. And then, Veronica, this upload button is what gives you the link. So you copy that link and you can drop that link in the room. So that's how you'll go from the screencast picture over to the room. And then Hong, absolutely not. We trade the same patterns, but it may be a different look if we have different fibs. I might have a termination condition where you have a clear path. You have to trade your charts. I might have an area inside of favorable large triggers where you have nothing. You have to trade your charts. But the rules are the same. You just have to apply them to what you see. Veronica, does that help? Give it a try. Take a picture real quick and try and drop it in the room. And while you do that, guys, I'm going to set us up to take market replay, to do market replay. So I'm going to close my workspaces real quick, and I'm going to act like I just opened up NinjaTrader. And we're going to go through market replay real quick. Vittorio, for 10 days you have no sound in the room for 1 minute. So Vittorio, weird. One sec. I want Vittorio to be able to hear me. Can you hear me now? You can't hear me now. Hopefully he answers that. I want to get him fixed. So guys, market replay. I'm going to do double duty here. The first thing that you have to do is you have to connect to the playback feature. So with no charts open, if you're connected to your live account already, you'll need to disconnect it. Go to connections and go to playback. And once you go to playback, it's going to ask you what day you want to look at, what market you want to look at. So let's say that we want to trade crude oil from yesterday. We want to go back and replay it and fix some mistakes and catch some trades. I'm going to pick CL 1124. That's the current market. And then I'm going to pick yesterday's date, which was the 18th, 19th. Once I do this, I have to download. So when you click download, you're going to see it downloading right there. My computer's super fast, so it doesn't last long. Once loading data disappears, and of course it's going to take a minute. Once that disappears, we'll go to the next step. And of course it's going slow. There we go, we're done. So I'm going to click continue. And that's going to give me this 1984 Sony Walkman play button. And I want to make sure that the dates that I'm trading are the same date, from 9/19 to 9/19. And this is going to make it load faster. Once I have this, hold on one second. So you're not seeing that part, Hong? Okay, just one second. Do me a favor, when you try it, hover over your NinjaTrader. Nope, it may be off screen somewhere. You downloaded the data. So after you download the data and you click continue, this doesn't pop up. Take care, Morgan. Okay, so what you probably didn't do, Hong, is you were probably connected to live and then clicked on the playback and picked your day and downloaded. Hit continue. You can't have two connections open. Cool, we just recreated the problem. So you have to get rid of that live connection. Somewhere you're connected. Do you have the green dot? One of these has a green dot next to it. No matter what it is, whether it's live, demo, it doesn't matter. Disconnect. That's the problem that you're having. And then once you do that, then you connect to playback. You can't have two running simultaneously. You can't confuse your NinjaTrader into trying to not only play historical data, but have a live data feed coming in. It can't discern the difference between the two. and it just locks up. Does that make sense? And then Veronica, are you able to post? Cool. So once we do this, pick your thing, go to continue, and now without that live connection, it takes me right to where I need to be. So from here, I'm going to make the dates match. You can trade yesterday's data, Steve. You just can't trade it with your live data running. Because if I try to have live and historical, I'm just going to confuse the hell out of NinjaTrader. That's why you have to be disconnected from your live and only connected to playback. And then once you get this hung, you've got it up and set, just open up that crude oil workspace. I can fix most things. And then once you open up your crude oil workspace, hit play and start following rules. And here's the thing, if you're like, oh, termination, no momentum, you can speed it up a little bit. But when you think you have a trade, when you're like, wait a minute, yeah, I know, right, Steve? I see what you're saying now. When you're like, oh my gosh, I think my rules are met, hit pause. Open up your KISS plan. Make sure that your rules are met. And if they're not, don't hit that buy button. And then shadow picks, you're still with me, right? I'm like a squirrel in a shiny room. Sometimes I forgot to give lessons and sometimes I miss questions. And I think I missed your questions. Boom. I knew it. I'm so glad I remembered that and didn't walk away. So Hong, there you go for market replay. Easy fix. Easy fix. And then just disconnect. Close your workspace. And you're all set. So I'm going to go back to my live connection. And I'm just going to open up crude oil again. And now I'm live. And that's why you have to not be on both, because now it's going to give me the most current data. So shadow picks. Over here, your ATM strategy. This is your predetermined stops and targets. This is one contract, one lot, 21 stop, 40 target. And there's a lot of options here. Trading crude oil, trading the S&P, guys. A 2 lot, 12 stop, 20 and 30 target. That's the closest thing to the KISS plan that there is. So if I pick that one, everything that we do, shadow picks for high probability trend trade, is waiting for a pullback. So if I need to go long at a mid band, I have to right click below price. It'll let me buy limit 2. And now my order's in place. And if it comes back and gets me, I'm going to help it. My stop is in place. My targets are in place. And if I need to move a stop or a target, maybe I want to go to that $100. All you have to do is click a line and move it. If you need to move your stop, all you have to do is click a line and move it. And then the opposite of long, of course, is short. So if I right click above the most current price, it's going to say sell. And sell means that if price comes up and hits that limit, my stop's above me, my targets are below me. So what happens is shadow pick, it can't put stops and targets on screen until you're in the trade. Because why on earth do you need stops and targets if you're not in a trade? NinjaTrader knows that. So once you're in, those stops and targets will show up. That's that is so common. I made that mistake as well. That's why I know the answer so quick. All of the answers that seem to just fall right out of me, guys, it's because I've made the mistake and had to get it fixed. I had to talk to my mentor, John Novak, and get to where I needed to be. So that'll help, and that's pretty common. How do I get my targets in there? First thing you have to do is enter the trade. All right, Miss Veronica. So you went long, right? And you're trading NASDAQ, which I think personally, and this is just my opinion, I think that's a horrible idea. I think the NASDAQ moves way too fast for a new user. Just my 2 cents. But I want you to see something. And I'm going to go back to basics, and I'm going to show you how to use those tools to draw too. So if I click on the arrow up here, Veronica, it's click and drag. If I left click on my screen, it'll go everywhere until I release the mouse. So let's just do it to this color. What direction does red mean down? Or does red mean? Do you remember? I just gave the answer away. Red means down, right? And then my next arrow. Do you see how I have strong triggers? But wait, down. So click and drag that box and you can do this as well. And even on this chart, it all says down. So one of the things that I would encourage you as a brand new user is don't fight the trend. Don't fight the momentum. And it's okay, we're practicing, right? No big deal. And these are the best pictures ever because this is how you get to where you want to be. Do you see that little tail when everything is going up? That might have been an entry long. Even, well, there really wasn't one over here. But going with the direction, going with the momentum, this is where your highest advantage comes in. And honestly, you took it from the right spot. But this one's going to probably lose more than it wins. Fighting against momentum. When you set the limit order, it was green. Really? All right. So you set it way over here, right? See, that's important information. No, but that's okay. Because Veronica, the large chart, I love that you said that because this is going to be a great lesson. The large chart will define direction, whether you should be looking up or down. The large chart will define momentum, and the large chart will define areas that may be terminations. The small chart is your entry chart. So we're actually going to look on this large chart for momentum. We're going to look on this large chart for the areas. And then once we have that large chart information, and let me show you what it looks like real quick. When the large chart says up with momentum, inside of this one bar, only one bar, doesn't even become a down bar, Veronica, is all of this movement. All the way to the area inside of favorable large triggers, all the way back, parallel with where it came from. All of this is inside of that one bar. So when these are strong and these are up and there's nothing in the way, we're going to use that refinement chart for entry. So what you were thinking is everything is up. Let me put an entry here at the mid-band, right? Exactly. And this takes the small chart out of the equation. And it actually worked, which is pretty cool. But there's easier ways to reduce risk. There's easier ways to maximize profit because this is a slow moving chart. It's not a fast chart. And inside of one of these bars are like all of this movement. Does that make sense? So it takes a minute to learn how to shift gears, to go from taking the large chart information and then refining it on the small chart to find the entry. But we're going to get there because you're looking at the large chart to lead the way. We're just going to avert your eyes a little bit. And one of the ways that I think is easy to do that, and this is my opinion, is to not get caught up looking at so much of the large chart. Large chart says down. Large chart has momentum. Large chart pulls right back to the mid-band caught in between triggers. What a great opportunity to use that confirmation bar we were talking about. And sure enough, momentum pulls it all the way down to Fibonacci support. So this never even started to go up. This is just the perfect look We just have to refine a little entry that gives us virtually no risk. Make sense, everybody? Narian, is today a little easier than yesterday, I hope? Yeah, Veronica, don't ever think it should hold. That's an opinion. And opinions are expensive in day trading. Trust me, mine have cost me plenty of money. One of the things that I encourage you guys to do is really commit to this idea that there's only one reason that you'll enter a trade, and it's because your rules are met, because your rules have proven to win more than they lose. That's what we call an advantage. And to focus on learning this so that you can repeat it every time it happens. And that doesn't happen in the first week typically, Veronica or Hong or anyone else that's new in here. Your demo, and your salesperson is going to ask you to make a decision at the end of your demo. Your demo is for you to understand, one, that the software works. And I hope that you see that. Within the first week, I hope that you see that, yes, the software does work. And absolutely, people are making money with it daily. And the second thing the demo is designed for is to see how I teach. To see that every day you have the ability to get feedback. That every day there's a lesson that's going to make you a stronger chart reader and ultimately a stronger trader. And one of the things that with Nexgen, guys, is we don't abandon you. There is no, hey, guess what, Veronica? I'm going to teach you about momentum today, and for the low price of $500, I'm going to help you recognize termination conditions. And then once you're good there, it's only $1,000 to learn how to enter the market. And there's people that do that. I don't tell you when to trade. I don't tell you why to trade. I don't tell you how to trade. I teach you to read your indicators so that you can make good decisions. And that's kind of what the class is dedicated to. So as you go into the weekend, ladies and gentlemen, open up your large chart and let's start filling out that 101 section on your spreadsheet. Let's start taking pictures of strong triggers and annotating why they're strong, and taking pictures of termination conditions and annotating why they're termination conditions. And let's just get that little large chart recognition in so that we can find those entries. And guys, next week, I'm going to knock your socks off. Week 1 is fun. Week 2 is where you really start to put it together. And you're like, oh my gosh, I can do this. Let me get really good at it. So any questions before we call it, guys? That's pretty much my week. And if you were with me all week, you realize that I said the same thing every day. Every day it's the same.